guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure. Good morning, guys. Let me just hit the record. 1 second, everyone.
Recording in progress.
Welcome, guys. Good morning. Thank you, everyone, for joining. Happy holidays, and wish everyone a merry, very merry Christmas to those that celebrate. In just a couple days, Santa is going to be coming. He knows if you guys have been naughty or nice. Santa knows if you've been over leveraged or trading with proper risk management. So if you find that Santa leaves you cold and not some very nice presents, he knows that you were in 2024. Santa knows this is Forex Santa. He knows that you were over leveraged. He knows that you didn't follow your trading plan this year. Santa Forex knows that you didn't have a daily routine. Santa Forex knows that you revenge traded a couple days. But if you get some good presents from Santa this year, then he knows that you're following your plan. He knows that you're taking risk management serious. He knows that you're not gambling in these markets. So I hope that Santa Forex visits you and gives you something good. For those that get coal, we got to work on a few things in the new year. James, don't tell me you're on the naughty list. I hope you're not. I hope everybody's off of that naughty list, but some of you guys will be on the naughty list. So I hope everyone can work on these things, understand it is very important for you as a trader or an investor to learn these things. If you want to do this long term, you got to learn this, guys. And I hope that this is one of your resolutions to really fix. We all make mistakes. We all have bad habits. But just please work on it. Just work on it. It's not an overnight process. You're not going to fix all these things overnight. It takes time. Some traders we talked about in the Journey of the Trader webinar that we just did recently takes years and years to get through a particular phase or stage in trading. So I know that you guys can do it. We believe in you guys and have seen some of you guys be very successful in these markets. So I hope everybody, that's my wish for the year, that everybody here achieves success in the markets, your own personal success. Okay, guys? So the plan for today. Thanks everyone for joining. I appreciate all of you guys. This is going to be our last live of 2024. And then we're going to take some time off. I'm going to be flying right after this call to somewhere very warm in the Caribbean and enjoy some time over there with the family. And Dave is also going to be taking some time off to enjoy his time with his family, as should you guys. After this call, if you guys do trade the rest of the week, be aware of the market hours, when they are open, when they are closed, which days close early, which days have the US banks that are closed, and just pick your days wisely that you are trading. Remember, during holidays, there could be a lack of volume in the markets. With a lack of volume, if you're trading with brokers, they might have spreads are unusually higher. Fills might not get filled exactly where you want due to slippage and just all of these things. So factor in all of those when you do trade, if you are going to trade this week or next week. Okay, we will do a few securities today, but we got to get into the markets and talk about what's going on first. Okay, so thanks everyone on Zoom. Thank you guys for joining. I appreciate all of you guys. Dale, good morning. Mike, welcome. Sergio, good morning. Sally, Forex Barks, thank you for joining. I appreciate you, brother. Thank you. James, welcome. Amanda, thank you. SSDN, thank you for joining. Thank you guys. I appreciate all of you guys. And everyone on YouTube, thank you guys for joining as well. Appreciate all of you guys. Michael, good morning. Thank you. Dumani, welcome. Uncle Daniel, I'm Uncle Ronnie. Welcome, Uncle Daniel. Will we receive crypto signals? Yes. So in the new year, we will be doing a little bit more crypto and stock and options and things like that. Okay, so it's all coming. Just in the new year, we're going to start to prepare all that. John Ma, welcome. Sandile, welcome. Diane, thank you for joining. Abraham, welcome. Thank you guys. Yassine, welcome. Thank you guys. Okay. No problem, guys. Okay, so what we're gonna do is we're gonna go over the news before we go into the charts. Okay, so I always start. My daily routine is going to Forex Factory. This over here, free website. Does what I need it to do. Just basically tells me whatever currency I'm trading, whether I'm trading the euro, the British pound, if I'm trading the Canadian loonie, which is at historic lows and getting beat up pretty bad lately. Hopefully, we're gonna have a shuffle in our cabinet here, and our governments will be changing very, very soon. Canada's just a disaster right now, as are other governments around the world. But hopefully, here in Canada, we can fix this for the new year. And moving into USD, if you trade the US dollar, so there's currencies for everybody available here, and then they have different times. So 2 a.m. you guys know is pre-London. Then we move into the European markets. Then 8:30 we come into the North American markets. Then later afternoon we have post New York and going into the close of Wall Street. We've already had some European news. So if you were trading London this morning, how was it trading? How was the volume? Was it choppy? Was it volatile? What was moving? And then we'll see how this volume moves into more of COMEX market and Wall Street. Okay, so I always like to look, if I'm starting at this time around 7 a.m. Eastern, we're going to go through some 8:30 a.m. news. I always look to see if there's going to be some volatility, some high impact red folders, specifically for the US dollar, because a lot of indices or currencies or commodities that we trade are correlated with the US dollar. So I like to pay attention to news regarding the US dollar. We don't have anything this morning. We do have some Canadian news for the loonie. We do have our GDP month over month. If you are trading anything to do with the Canadian loonie, this obviously will impact the loonie. But if you're trading other things, like for example, if you're trading NASDAQ, I don't think that this Canadian red folder will have a high impact on that index. And then 10 a.m. Okay, so we all know that Wall Street opens at 9:30. 30 minutes later, we have a 10 a.m. folder. We have our consumer confidence report. It's an orange folder, so it is medium impact. There could be a little bit of volatility due to this consumer confidence report. And then we have later this afternoon, Bank of Canada summary of deliberations. We do have later, if you are doing anything with the Japanese yen, there is the monetary policy meeting minutes out of Bank of Japan and Australia. Okay, and that's for today. And if you are trading tomorrow, okay, this is Christmas Eve, the day before Christmas, markets close early. Okay, so if you are trading a particular security, make sure you check with your broker or the exchange what time it closes at. Most securities close at noon or 1 p.m. or earlier tomorrow. Okay, and then you can see that there is also banks closing. The German banks will be closed. New Zealand banks are closed tomorrow. Australian banks are closed all day tomorrow. There is some U.S. news if you are trading the North American markets over here, but just pay attention, because if you don't understand this and you're holding a trade, you might be trading noon 1 p.m. and then you find that the markets close, exchanges closes, brokers close, and then whether you wanted to or not, you're forced to hold that position, that trade, going into the Christmas and the next day. So just this is part of your due diligence, guys, to understand that. And then obviously we have Christmas Day, Wednesday, December 25th. All markets are closed, all exchanges are closed, all banks are holiday. So you can see over here. And then things open up again. Some open up, some exchanges open up on Thursday. It's could be, and also in North America, also a half day. So you'll have your U.S. unemployment claims at 8:30, your weekly unemployment claims from last week. You can see last week's numbers, 220,000. This week, 218,000. You'll also have your crude oil inventories at 11 a.m. Then around noon, 1 p.m., again, for particular securities, you might have a half day open on exchanges, close, and then things operate again like normal on Friday, and then you go into next week leading into New Year's and New Year's Day. Okay, so if you are going to trade this week, just pay attention to the operating days for your exchange and broker. Okay, and if so, you don't get caught up holding a trade whether you wanted to or not. This is part of your job as a trader to understand this. And then if you are also trading, understand that volume might not be the greatest because there's not a lot of volume in the markets at this time of the year. Because of the holidays, and if you are trading, also there could be higher spreads than normal. There could be not the best fills due to volume, inadequate volume. Okay, and earnings, there's not much going on for earnings this week. If you go to the calendar real quick, you can see there's only one before open this today and one after close. Tuesday there's 0 before and after. Wednesday's Christmas, 0 before and after. Thursday, 0 before and after. So the entire week we don't have earnings. So there's no earnings. Just today you have Anavex Life right here at 7:30. In 5 more minutes they will be releasing, and also after hours 4:05. Limonera company. Okay, no big names. Not going to concern me. Discord signals, guys. We were sending signals all week on commodities. There was a nice one here, 300 pips if you had a runner set on gold. And a few indices over here. There was a buy on NASDAQ above this level, 21,300. We got some nice three big candles there, bullish candles, and also Forex. Okay, guys, we're going to get a little bit more into crypto in the new year with some signals, and we're going to start talking a little bit more about stock and options as well. Yahoo Finance, guys, just to get your daily fix on news while you're drinking your coffee every morning. This gentleman right here, he destroyed the markets last week on FOMC, kind of hinted that inflation might be coming back in the new year. They were scheduled to have 4 rate cuts. It's decreased now to 2, and the market responded to that news, didn't really like it, and took a little bit of a red bearish days. So Wall Street reevaluates higher for longer rates this week ahead. Investors will contend with turmoil in Washington and a more hawkish stance from the Fed. Biden launches new U.S. trade probe into legacy Chinese chips over here. The comeback of REITs. These are your real estate ETFs over here are REITs. Honda stock rises as Nissan merger talks formalize. So that's pretty good. If Honda merges with Nissan, you might see a little bit of appreciation in Honda security over here. It will appreciate Nissan and maybe depreciate Honda to acquire if that happens. What else is going on here in the news today? Let's see if there's anything. Bitcoin posts first weekly decline since Trump's election win. So Bitcoin, as you've seen, made all-time highs around 108, 109, I think on 110, and took a little bit of a pullback, which is normal. And we'll see if it can continue into the new year, breaking through 100,000 and taking out some new all-time highs, or we might see a little bit of a pullback. We'll see in the new year. Okay, so that's your news. I always recommend, guys, you always stay on top of your news, especially if you're an investor or swing trader in the markets, or you're trading particular securities. You should always be on top of the news, okay? And guys, our website, stocksnipertrading.com, we have a free blog available for you guys right over here. If you come to our website, click on more blog. There's one that was just that came out on Fibonacci levels, a little description on what it is, and shows you a diagram, some articles, some blogs on some information education on fair value gaps, order blocks, candlesticks, our trade reviews with gold, and just everything. There's a lot of good information here, a lot of free education for you guys. Okay, so let's just get into this. Everyone on YouTube, at the top of the YouTube channel, there is a pinned Telegram group, this one right here. I highly recommend that everybody joins this. Has all the promos in here, giveaways, everything we do at SST. Quotes, guys, good quotations. Even when financials are looking good, you still gotta go hard like you're broke. This is my personal quote here. And guys, when you look in your bank and let's say you had a great year in the markets or your trading account and your financials are looking good, it's not a good time to get don't get complacent. Just keep grinding. Put your head down, stay humble and stay hungry. You still got to work like you're broke. No matter how many zeros you've added in your bank account, just keep working hard like you're broke, and then that's when that account will continue to compound and it will grow, guys. Okay, the harder you work and you stay humble, it will continue to grow. That was one of what I learned over the years with my trading journey. Just don't worry how good the financials are getting. Just keep your head down and go to work. This is the blog over here, guys, on the Fibonacci. This was last week's gold setups. And everything we do here at SST. Okay, guys? So let's get into the charts. We're going to get started with gold. Gold is a love-hate for everybody. I know. I love and I hate gold as well. But we'll get started with gold and then we'll move into we'll look at multiple charts today and we'll see how things are moving, okay? Are you guys ready? Farouk, you're joining the stream for the first time from India. Welcome. Thank you for joining. Okay, guys, let's get started. So if you guys want to follow me on my chart, or if you guys have your own chart ready to go, or hopefully you guys have it already marked up. You got your areas. You've done a top-down analysis, and then I'm gonna do mine. Okay. So what I like to do when I start is just overall, what is going on with gold? How is it moving? Is there anything going on around the world that can affect gold, this particular security? How is everything going around the world with the tension, with the wars? What's going on with Russia, Ukraine as of late? What's going on in the Middle East? All of these things can impact this particular security. So it's good to know those macro geopolitical events as well. Whether you're swing trading this, you're investing in gold, or you're scalping this thing. It's good to know those things. You see Batman on the charts. Okay. Batman is a particular trading pattern. Is Batman bullish or bearish when you see Batman? Guys, I saw Sonic Part 3 yesterday. Fantastic movie. The kids loved it. If you can get it to take the kids out for the break, go see Sonic Part 3. Great movie. You guys remember Sonic Hedgehog from Sega Genesis back in the day? Great games. Okay, so this is our all-time high supply, just under 2,800. Futures, they peaked into 2,800. They went up there, and then you can see exactly the date was October 31st. So it was not Christmas, Halloween. It was Halloween, October 31st this year, where gold made the all-time high and had a little bit of a lag pushing down since then. We came right back up with this weekly uptrend. You can see the particular days: Monday, November 18, Tuesday, Wednesday, Thursday, Friday. And then over the weekend, then it got slammed back down. Consolidated, where gold was very, very, very choppy in here for about 2 weeks. It came back up on this big, nice 3-day push, Monday, Tuesday, Wednesday, and then midweek Wednesday, again, it came into this resistance and they pushed it right back down. Okay. the last break over here, Wednesday, December 18, we came into about 50% of that bullish candle. You can see how it's still holding the support. And as of last week, Thursday and Friday, it was bullish, and now we're trading inside here. So we might be consolidating here this week. If the buyers of gold can break it back up here, we might push to 2660, maybe 2670 up here. However, if the sellers are still absorbing, we might continue to push down and test 2600 or lower, okay? Or we might just trade sideways in here. So there is this particular area that's getting rejected. Where it was support right there, it turned to resistance with this red candle. Again, it was retested. It's showing the resistance. Again, it was retested, showing resistance. So multiple touches of resistance can make supply going into the future. So that's why I stretch this red box, because if we do come back up here in the future, this still might be supply and continue to push down. Okay, so you can see from the all-time high supply, they're lowering it, and they're actually even lowering it further down into here. So if I look now at another zone where it was acting as support in here, on that 2-week consolidate, on this 2 weeks of consolidation, was acting as support in here. I can see in the past how they tried to break it, but it kind of got gobbled up real quickly with that bullish engulfing candle, and then started that next move up. Here was the bigger break where it broke all the way down to 2535 and continued to push right back up. But then you see that big red candle kind of stop in the green box. Wicks getting rejected in the green box. This candle that broke it last Wednesday, it came back up green, right into the box, which should be red, and they pushed it right back down. Then Friday came back up green, right in the box, and now we can see today they impulsively broke it out, and then it's getting rejected, and it's red, trading right in this box right now. So what I do is I'm going to still keep it red because we have no closing volume, closing above here green, so it's still in fact red. Okay, so those are our immediate zones above us, and they're all representing supply or resistance or sellers, however way you say or look at it. If we do continue to push down, now let's figure out some point of interest where we could go. Maybe back down to here. Okay, let's draw a yellow line right here, and I'll explain why. Okay, so this is a yellow line. I'll make it a little thicker so we can see it. Okay, so do you see that I placed a line right here at this pivot point? When this big red candle came down and stopped right here, you can see where the market stopped and the buyers of gold stepped in right here around 25.83. You can see this clear to the eye. You can see how it stopped right here and pushed right back up. Are we going to come all the way red back down into here, maybe force two bottoms, a double bottom, or the seller's going to continue to break it down? If we lose this area, this pivot of support, then naturally we might come down to the next pivot point. Where's the next pivot point? It could be if I place a line right here where we got body, a body, a body, a body, a body, and then we hit those bodies. I could go a little further there if I want to touch those wicks, so anywhere kind of around here. If you're touching anywhere in here, you can draw a zone if you like to capture everything. This is what I tend to do. If I don't know exactly what to do, then I'll just draw a zone. I'll use the line, the yellow line as reference, and then I'll draw a zone. Do you guys see what I just did there? And then again, stretch it into the future. So if gold comes all the way red and breaks this pivot, then that's traditionally where it found a big bottom right here, found another bottom here. Maybe we'll find another bottom here. If not, continues to break. The only thing that will hold it is that wick right there at 25.37, this wick right here. And then we're going to drop down where there was all of this congestion, all of this sideways volume, and you can see it's right around 2,500 right there, 24.95. So $5 off of 2,500, so right below there, that psychological 2,500. If you want to draw a zone, okay, from 24.95, you can draw your zone. Where would the zone be? Just look at the bodies above the yellow line right there. and then you got your zone, and then you can stretch it again into the future. Okay. RS plays, do I suggest not trading in this time of the year? It's up to you. It's up to you. Just understand, if you are going to trade, you got to understand that the volume could be hit or miss. You got to understand that the spreads with some of your brokers might be a little higher than normal. Your fills might not get filled exactly where you want due to inadequate volume and slippage. There could be more volatility and no structure in the market this time of the year. It all depends, guys. It's just think about it. Just think about it. Maybe this is a time of the year where you relax and you review your trading for what got you here this year, things to work on, as opposed to stressing out trading the last few days, the last few weeks of the year. What happens if you make some critical mistakes this week? Okay, you're going to have to go through the holidays with that in the back of your head, and then look at how you're going to start your new year. Everyone wants to start a new year fresh, a new year, a new everything. Whether you're going to the gym, whether you're starting a diet, you want to start fresh. You want to start new going to the gym. And same with trading. If you go into your new year, let's say you blow up an account this week, you're going to have to think about that and then start your new year like that with that negativity. So this is maybe just relax, in the market. Watch the candles, watch the charts, watch how things are trading. When you're trading price action, every day is different, okay? So if you're asking me this question, should you be trading last week of the year? Then I can, maybe that you're not as experienced or you don't have enough years trading this time of the year to understand how it is. But I've traded a lot, and I know that it's good to take time off the last week of the year. Okay, I know that I might miss out on a couple trades, but I'll make up for it in the new year. This is a good time to reflect, go back, look at your trading. What are areas that you can improve for the next year, as opposed to just keep trading, but it's your decision. Okay, I don't want to say to everybody not to trade. If some of you guys can do really well, maybe make some extra money for the holidays, that's entirely up to you. But go about it with a proper approach. You know what I mean? Think about it, whether you're going to trade, or set some boundaries, set some limits. I'm going to trade maybe today and tomorrow, and then I'm going to take the rest of the week off. And then how are you going to come back next week and things like that? Okay. So let's start now talking about more, where could gold move today? Where could it go tomorrow? Where could it go next week? What levels do we have? So we kind of got our bigger areas of demand and supply. We have some areas of interest below us. What about some areas of interest above us? Okay. One that I would look for is this consolidated week, where it was just going up, coming back down, going up, going down, going like inside here. So another yellow line, point of interest, I personally would put somewhere around here. Okay, the reason why I put it right here is because I can see that there's a body and a body. You see the volume? It kind of impulsively broke out above that yellow line and came back down. It hit the yellow line, back down. Impulsively broke out from the yellow line, came back, and look at where it closed. It closed right at the yellow line. Next day, opened red right at the yellow line and pushed down. Again, this day, kind of impulsively. But you see where traditionally all the volume is trading right around here. So kind of get a body, and then I see how that red bar closed below it. You see the retest, it hit that. So it's a good area. Number one, it's a good point of interest, just line-wise, just looking at the line in the structure. But then to further give me confirmation, look at the number. Look at the number to the right. The yellow line says 2,650 and 75 cents. To me, and everything I teach here with price action, time and sales, it doesn't get any cleaner than that. Not only did we pick a good point of interest with the structure of the market, okay, but then we got backup, like confirmation, telling us it's at a nice psychological number, 2650. That's a beautiful number. And then it also complements it even more. When we move in 25-cent increments, the power of 25 is a very, very psychological number because it divides everything. When you have a dollar and we break it, we're going to break it into 4 quarters. Okay, 25 cents, 50 cents, and look, 75 cents. So this is to me, a perfect area for point of interest to see if the buyers have the ability to push it back up to this yellow line. Sorry, I'll just change the color in 1 second. If they can bring it through here, and that might be resistance going into the future, and then they push it back down. If the buyers of gold can impulsively break it out like they did a few days here, but close it like they did right here on Monday, December 9, and officially close it with the volume, that's where you got that extra 2-day push, but there's bigger supply up there, okay? So to me, that's a good point of interest. Do you guys understand that, okay? We can turn today's session into live trading, but also education. Do you guys have any questions about that? Because I get a lot, Ron, where did you place that line? How did you place that line? Why did you place that line? Always after the call. And I'm like, I explained it in detail while we were on the call. So I don't want to go past this. Do you guys understand this? Why I chose this? I didn't choose this area just because I wanted to. Like, I looked at the structure, and then I got verification at the number. Do you guys understand that? Like, hopefully I'm not talking to myself here, guys. This is the last session of the year. Let's try and make this interactive. You got it, Sergio? Perfect. As long as one person gets what I'm saying, I'm good, okay? That's all I do it for. As long as one person can get it, perfect. I've done my job then today. If 10 people can get it, that's amazing. If 100 people can get it, oh my God. If 1,000 people can get it, we can maybe help 1,000 people get better on their technical analysis and maybe help them financially in the future. Guys, the more people we get on here, the better it is for everybody. Okay, this is free financial education to learn about price action. And this is all, I want to be clear, this is all self-taught. Nobody taught me this. I was just like you guys, staring at the charts for multiple hours a day, for multiple years, just staring at these things, and then watching how the volume would come to these areas, touch it to the penny, like to the exactly, and have a reaction there, whether it would break through, whether it would get rejected, whether the volume would close right there, but just watching these things over and over and over. So if you guys ask me, I've done your back testing for you guys for the past 20 years, 15, 20 years, I've done your back testing for you guys. I'm telling you that these are valid areas. It just, when the volume gets there, you just got to exercise some sort of plan. Because there could be an impulse here, or there could be a confirmation close with volume. So that's what you're looking at, these particular areas, because you can see multiple times where this day came up green, green, green. It came right up to that, but then there was that impulse. If you bought that, then it got rejected and then you were back in drawdown. Okay. The only day that confirmed with volume that closed above that yellow line was right here, Monday, December 9, and then we got that next push coming right back up. But then you see how it got rejected here and it got rejected there. That's why I have that big red box above us, okay? So now let's follow Friday's volume and how it moved into today, okay? So let's just recap Friday. Friday is this green candle right here. It opened. Friday was initially bearish, where it came red, 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 where it created the low of the day. So Friday's low is right there, the wick, 2,589.50 cents. And you can see how it's right approximately 50% of Thursday's volume right in here, in this green volume. It came down traditionally right into 50%, and it came back up. It came right, buyers brought it right back up to the opening price. So to me, where it closes and opens, that's another point of interest on a daily candle. That's where it closed the previous day and they opened it the next day. That is an area of interest always for whatever security you're trading, at whatever time frame. Wherever a candle closes and the next one opens, that's a point of interest, because if it dips below it, we want to see if the buyers can come back up to the opening price. And it came all the way up to where it opened, and they pushed. Look at the previous day. It was bullish, and then they rejected it in the red box, and sellers pushed it right back down. So the buyers on Friday had a lot of work to do to continue to push that volume and fill the previous day's rejection. It's not like it's a short wick. It's not a small wick. This is a relatively large wick. So the buyers, in fact, pushed it all the way up to the previous day, Thursday's high, and they actually broke it out even higher. So they did, in fact, create a higher high, but we have a trend coming down, bearish. So the sellers are there, and they absorbed them and sold it off near the end of the day, but it closed, and it closed with relatively large volume. So what is the first thing I'm looking at Friday, December 20th volume on the candle? What do you guys think the first thing my eyes are looking at? It's pretty substantial, 50%. Yeah, Lisa, very easy. Okay, so what I'm doing is I'm looking at the opening price and the closing price, this body, this green body, and I'm looking where's approximately 50%, that psychological midpoint. Some of you guys are doing it the entire range from the low to the high and figuring out. You can definitely do that if you like. Okay, just keep it consistent if you do that. If you're, this is another thing I get asked a million times, so I want to make it clear right now. If you're picking from the lowest point to the highest point, the entire range of that particular candle and time frame, and you want to figure out 50%, do it throughout your analysis. Stay consistent. Okay, for me, I don't do that. I look more at the body, where it opened and where it closed. To me, that's more the critical volume. There's a reason why it opened there, and there's a reason why it closed there. Okay, the wicks represent the range, how high, how low it went, and that can be utilized for if I do get into a trade, if it will fill the previous high or low. Okay, so you can just eyeball it. Okay, like that's me just eyeballing it from opening to close. That's pretty much 50% of it. Okay, I don't suggest we need to eyeball it if we're not scalping the markets like on 1 minute candles. If we're doing an analysis, we can take our time. Okay, so what you can do is bring out your Fibonacci tool and put it where it opened and put it where it closed. Sorry, I just got to change the settings here. 1 second. Okay, let me just change the settings. This is what you can also do, guys, too. I like to use my opening, like the 0 green. 236, I like to keep it neutral, so I use a white line. 382, this ratio, I like to keep it neutral with a white line. 0.5, this is not a Fibonacci ratio. It's a psychological midpoint from the 0 to the 1. So this is going to give us exactly where 50% is. I like to represent it with a white line. 618, this is our golden line. Some of you guys are aware of it. 618 is like why we use the Fibonacci tool. So I like to make it yellow or gold, like its name, the golden line, golden zone. 786, again, it's a Fibonacci ratio. I like to keep it neutral. 1, so if I start at this point green, my finishing point, I like to make it red. Okay, and then if I do the opposite, if I started at red, my finishing point is green. And then if you want to keep your kind of extensions, your 1.618, again, I keep it neutral. And if I want to add one more extension above 2.618, keep it neutral. And that's the way how I keep my settings on my fib. And then you can see now how I placed it right where I started it, green. Okay, that's my starting point where that body opened. And then I put it right up to the closing price. That's why it's a red line up there. And then now I can see my ratios and my extensions. So there's 236, 2,648 cents. Okay, nice psychological number. My next point is 382. And you see where I placed that yellow line? That was my pick, where I just chose freehand, just eyeballing. So you can see how I was off by a little bit. Okay, so if I bring that yellow line down, you see how I lined it up exactly now with 0.5, and it's exactly 2,670 and 80 cents. There's my 618, 2611, and right now we're trading, basically the volume is at the 786. You can leave your Fibonacci lines if you want, and they act as support and resistance. The only thing that's variable is the volume. So if it's coming down to each one of these lines, it will represent support. We'll see if it holds, how deep of a pullback it is. Is it a shallow pullback? You can leave them on or you can take them off once you plot your 50% line. Okay, so there it is. That's 50%. So now we can kind of look at the close and how we opened. So there we closed on Friday. We opened right here. So that's a point of interest. Again, closing price, opening price. I see that there's no gap up, there's no gap down. It's just a continuation open. So I place a yellow line. Okay. Remember, yellow line is a point of interest. And then what happened there was it was initially bullish. When gold opened today, it was bullish. You can see it came up green, 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 green. We took out Friday's high. We made a new high. But you see above us, above these wicks, there's a big red candle still coming down. See above it, there's still this supply coming down. You see above it, there's still this supply coming down. So yes, we had a nice little bounce starting Thursday of last week going into Friday, but now you see how we're kind of consolidating and the sellers are continuing to push it back down. So if the buyers of gold can bring it back up on the daily and close it above this red box, that might change this zone to a demand depth of market and more buyers will step in here and maybe we'll get that move to come right back up to this yellow line, 2650. But right now, look at the volume coming down. So as it came all the way up here, our high of the day, I mark the high and low of the day with a purple line. Okay, so that's my high of the day. 2633 is today's high, right up there. And it got rejected. Okay, so we can see that there's some sellers up here. Every time it comes up here, they push it back down. They came up here Friday, they pushed it back down. We came up here today, they pushed it back down. So that's telling me that the sellers are present there. They've rejected it 3 times. Okay, and then when you start to get rejected multiple times, you start to get exhausted. I use this analogy like basketball. If I'm driving one-on-one against Shaquille O'Neal. Shaquille O'Neal is 7'1", 300 pounds, and I'm 5'11", 6 foot on a good day, and I'm 200 pounds, and I'm driving on Shaq, and he slams me down one time. Okay, I get mad and I get back up, get the ball, and I drive against him again, and he slams me back down. He rejects me. I'm getting tired now. I'm like, can I beat Shaq? So I go for a 3rd time and he rejects me again. What does that do to my confidence? What does that do to me? I'm starting to get exhausted. I'm thinking in my head psychologically, I cannot beat this guy. And so that's what it feels like when buyers keep pushing it and they get pushed down. Buyers keep pushing it and they get pushed down. Buyers can start to get exhausted, and when you lose them, then a seller can just naturally come in and continue to push the momentum down. Do you guys understand that analogy? I know it's a silly analogy of me driving on Shaq, but if you guys understand basketball, you guys know Shaq is a big dude, and I can't dunk on him. I can't dunk if he's not there anyways. so imagine Shaq is there too. I can't hoop like I used to back in the day. Getting old. I wake up and I got aches and pains in my joints, guys. It's now that we're not young anymore. I could use a step ladder, Rob. I could try that. Or a trampoline. I could have a trampoline there and jump right over him. Yeah, so those are, if we manipulate, okay, you know how markets manipulate? Okay, good. Now we're learning. You know how markets can gap up? Okay, this is a good example with the trampoline. Okay, so if I can't naturally dunk over Shaq, I can put a trampoline there, run, jump on the trampoline, jump over Shaq, and dunk it, okay? But that's done with manipulation because I had to use a trampoline. So sometimes when you see daily candles close and there's rejections, you guys know when you see a gapped up candle, it's kind of like a trampoline. So they kind of manipulated it up to push it, to prop it up. So that's a good analogy, guys. Using a trampoline, jumping over Shaq, but also how the markets use a trampoline to push above that resistance. They kind of bypass it by gapping the market up. Okay, something to think about on the holidays now. Vic, I was an all-around 3-point shooter. That was me. I was shooting guard. Okay, guys. So what happened? We came to the high of the day. Sellers present, pushed it down. They rejected it. Red, red, red. Where did we come back to down to? We came back down to the point of interest where we opened. Were the buyers there? Did they protect the opening price? No, they lost it. Sellers pushed it down. I can see the red volume below the yellow line. They pushed it down. They pushed it down. They pushed it down. And right there, at the bottom of our red box is pretty much where the low of the day is. Okay, so the low of the day is right here. That's where we have a purple line. That's our low of the day. It's traditionally above 50% of the green volume the previous day. So it's creating a little bit of a higher low, and the buyers are present and pushing it right back up right now. Okay, but we still have this majority of this red volume still pushing down. Now, if you're going to continue to trade gold all day today and watch it or go into tomorrow, will the buyers continue to push all this red volume, come back up to the opening price, 26.21, and have the ability to flip this candle and come back up green and close it somewhere above here? That would show me momentum. That would show me buyers could push it the next day and continue to go higher. But if the sellers continue to absorb all the buyers and we continue to come back down to the low of the day, they might push it further down to here. We might revisit 26.07 today, test 50% of the green body candle. If this can't hold, we might come down to right here. Here you have another body and a body, 25.94 right over here. Okay, so we can place kind of a yellow line right there. Okay, so that's kind of daily. Now what I do is once I have, again, my lines, yellow for point of interest, purple high, purple low, look at where the volume now is trading. So the volume is now trading, again, just in this area of supply. Who has control? Okay, if we look overall, monthly, buyers are in control. They're continuing to push it up, all-time high, pullback, higher low. But now you see kind of equal highs up here. Sellers now are in control of last week. They're kind of still in control. The buyers tried, but the sellers are still have the ability to continue to push this thing down. So now what we got to do is go to a lower time frame to kind of figure out what's going on in today's daily volume. So I get off the daily and I go to the 1H, the 1 hour now. And we're about 20 minutes away from COMEX market opening up. So you see the hourly candles, they kind of have a double top. They came up right up here and rejected it back down, neckline, came back up 2 times, and they pushed it right back down. Okay, so that's how it's moving on the hourly. Now we can see when did it start moving like this. So now going back. Right here, this big green candle, okay, leading into 2200 is the futures market, 8 p.m. So there was a move Sunday, 7 p.m., like when the markets just opened up. We continued bullish midnight, 1 a.m. Here's pre-London. That's when it hit the high of the day, pre-London, 2 a.m. Here's London's candle, 3 a.m. We continued 4 a.m. 5 a.m. They really flushed it down. 6 a.m. made the low of the day. And see how we're still trading inside here. So we do have some hourly structure. So if I follow these hourly candles, I can see now how they're trading in that big red supply zone. This yellow line is a point of reference, point of interest, point of interest, point of interest. Here's another point of interest. There is also some structure being built on the 1 hour, okay, currently right over here. If I place now a white line, hourly structure, I place a white line right here, and I'll tell you why. Because now I'm looking at the hourly candles. I can see this bullish candle that impulsively came up, and look at where it got rejected, right around that white line. Here's where this candle broke out, but look at where it closed, right at the white line. Volume above the white line, we continue to push higher. Volume closed right at the white line. Look at your hourly ignited red candle drop. Look at this candle, how it closed right at the white line, and look at how it started that bullish move right there. Look at the pullback where it came red, red, red and stopped right near that white line and went right back up. Here we have a body just now, 6 a.m., closed below the white line. This candle came up, but the volume is still below the white line. So this white line I use for reference. 22,616.75 cents, just below 26.17. If the buyers cannot bring it above this white line, it's going to still be bearish. This is where the hourly buyers have to take some control. If they cannot control above here, the sellers will continue to push it down. Yeah, there could be a pullback. It could come up green, 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 and then they reject it back down. Okay, do you guys understand that? For me, I got to see the buyers take control of this white line in order to fill back up to this point of interest. If they don't, this could still be considered resistance and they push it back down. Okay, so if we're buying, we have to understand that we're counter trading all of this red volume. Maybe something will develop at the low of the day. We're not too far from the low of the day. So what's below the low of the day? Liquidity. Are they going to come down and take out the low of the day, maybe grab some liquidity, bring it back up here to try and have momentum to take control there? Maybe they do close it above there and then we retest this and then we're gone. But the reason that they can achieve that is because they grab liquidity by taking out the low of the day and then gain momentum. Okay, so that's if we're going to counter trade, if we're going to buy. Otherwise, if the sellers continue to push it down and close it below there, it closes below, it might retest this and continue pushing down to this point of interest. And then we see if the buyers will step in here and start to move up. Okay, so that's why I use these particular points of interest to watch who takes control, what time frame takes control. And we can sit and watch the hourly candles with 54 minutes to go, or we can go into the lower time frames, the 5 minutes, and watch right now what's going on the 5 minutes. Okay, so you can see that there was a big heavy drop from 4 a.m. Eastern, drop where sellers were in control. Just right there, 6:45 is when we hit the low of the day. It came back up, and then you see how the volume kind of concentrated at the white line, closed above, and then it brought it right back down to the white line. Kind of came back up, they pushed it right back down. Kind of came back, they pushed it right back down. Then the sellers flushed it back down. So every time now it's coming down, it's going back up. 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 So this now is kind of a 5-minute consolidated phase. If you don't feel comfortable trading this, let's not trade it. Let's see what happens in here, because we're close to that hourly point of interest and we're right near the low of the day. So something is going to happen down here. Colmex is in 15 minutes away, and normally at 8:30 we do get some red folders on normal traditional days. If you look at the overall trend, we are pushing down, but also like right here, there's a trend kind of coming down right here. So if we're buying, we're going against the overall trend. We're counter trading. So you got to have a plan also when you're counter trading. Maybe if you're countering a move, what I do is I go smaller. If I'm speculating, I'm testing out. For example, if I was to buy one of these wicks, I know that the market could continue to push down, but I'm kind of testing to see what the resistance is. So I know that I could possibly get rejected and go to my stop loss and lose. So would I want to take that trade with a larger size? Do I want to take that with a mini where I can take a micro? Do I want to take that with a standard lot where I can take it with a micro? Do I want to take like a smaller trade to feel it out? And then if it goes against me, I take a loss, but it's not a significant loss. Then I can regroup and recalculate and keep going. If you go in hard and then it comes down, you're probably going to get stopped out and panic and lose when you know that it could definitely come down. Or we just wait to see what will happen. We know gold is not just going to trade inside here this entire day today. We know that it's going to make an attempt to take out the low of the day, possibly either take it out and go back up, or take it out and it continues dropping, or the buyers are going to step in and start to break that mini trend we have, respect this, and start to push up here. Okay, they're already You can see that they're accumulating right now. This is a good candle, but still it's going against a lot of the resistance in that red box, okay? So we cannot just judge it on one candle move. We got to see how it reacts up here, where it closes. You can see it's kind of forming a little bit of a double bottom, like right there where the volume is. There's kind of our neckline. See the second bottom, all of this, and you see now how it's coming up, could break, and then we want to see maybe it consolidate up here to come back up here, okay? And it could definitely just continue to go right back down, okay? So we got to watch for false fake outs up here. Rob, the feeler trader mental game changer. For me, I can attest to that, Rob. For me, I'm saying it personally for me. I don't know how others feel about the feeler trade game, but if it's helping you, it helps me, honestly, like you said, mentally. It helps me mentally understand that, and I don't use my feeler trades to go against me on my profit loss for the day. They're very insignificant. Like they're 10-cent trades. So if I go in 30 pips of drawdown, I'm down $3. For someone with a smaller account, maybe that is significant. But for me, with I'm using a larger account, $3 is nothing. That's how much commissions are what I pay for most trades. But it teaches me a lot of the move. Because a lot of us, we get stuck counter trading and we make mistakes, and then we keep adding positions to a wrong trade, and then make matters worse. Sometimes then we're going to revenge trade, we're going to get upset, we're going to put bigger sizing in, and then we create an entire mess, disaster, where it could have been avoided. Okay, so now what happens? Look at the time, guys. We're at 8:10 a.m. Eastern. We're going to roll into COMEX very, very soon. So that was a pretty big answer. Okay, look at the volume in this candle. Came up, and look at where it closed. It closed right at that trend line coming down. We have no wick on this candle, and then it opened up right above the trend line, and we continue to push. But we do have 5-minute resistance right here in the market. Let me just place a red line right here. Let me make it thicker. Okay, so you see here, this previous push, it came down. Now let's see if they can at least fill it up to that red line, maybe go higher, or is it going to get rejected and we're going to come back down? Okay, now we're kind of consolidating above the hourly. Remember the white line? That was that hourly, 26.16. So let's see if the buyers now take control of the hourly pivot. Okay, and remember, this is an impulse candle breaking out. It just opened and broke out. We need to judge when this thing closes in 3.5 minutes where and how much of the green volume will close, if there is green volume. The sellers could reject this candle and bring it all the way back down. Another thing I look at is 50% of this big green 5-minute candle that started this move. Where's 50% of it? Right around there. And then you can see how it used to be like the resistance, this wick, this wick, this wick, might turn to support. So if the sellers push this all the way right back down, I'd like to see the buyers step in right here. I'll even make like a little green box to show you. I want to see the buyers hold this position if it in fact comes down here. I want to see if the depth of market will be created and I can stretch it into the future. Okay. Please have a glass of water. Thank you. Thank you for telling me that. I'll have a glass of Gatorade. It's not easy talking a lot, but I appreciate that. Thank you for looking out for me. I tend to lose my voice a lot when I'm speaking here. Okay, so I'm going to ask you guys, what are your thoughts? This is the bigger resistance above us right here. And look at the double bottom now. Now it should be a little bit more visual to you guys. See where we came down, Okay, I know that the wick created the low of the day, but look at where the volume is concentrated right here. There's the bigger resistance. We came back down. Okay, look at all the wicks and look at where the volume is concentrated right here. And we came right back up. Okay, so look at here. Would that not be just a normal traditional double bottom trying to break this resistance? So what we're looking for is, can they break that resistance so that it can retest this hourly or this? We'll see how the depth of market is building, and then maybe have that momentum to continue to drive up to 26.21, that daily point of interest, and see what happens up there. But we're fighting through resistance right now. And we're a few minutes away from COMEX market open. Okay, what are your thoughts on gold? Do you guys think sellers are going to push this thing back down? Or do you guys think the buyers will potentially break this resistance and move it up here? And if the buyers are moving it up here, they're still going against this overall trend, okay? But we might be developing a reversal. We might be witnessing a reversal happening. Bullish incoming, guys? Okay. Yeah, okay. So most of you guys are bullish. I see built its base going bullish. Buyers will push. Let's see. Okay, here's the close of the candle. And then this is our final 5-minute candle. Then 8:20 is COMEX. So it did close above that hourly white line. How high is the wick? Okay, it's not there's a relatively low wick. Okay, but you see that how it came up and it didn't break the previous high. So these are what we call like kind of tweezer top equal highs, where it did come right up and look, it didn't have enough to just break that high. So naturally, you see how the candle comes down red, red, red. We're testing now the white line. This is the first retest to see if this is going to hold as hourly support. Okay, so this is the first test to see if the buyers are here. See how they responded? Did you see the flick of that candle? How it flicked up? So you see how it came down red, 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 right down to our hourly, which was resistance, but now support. So I can now say that right now our hourly support is there. I can tell by how it got rejected, and now it's filled back up. Now it's a bullish pin bar filling, and now we could potentially, if we can get to the high, pop and fill up to here. But you see how every time, you see how nice that candle built? It built, and again it came right up to the high point. And the sellers, it's like Shaq is sitting up here, that analogy. Shaq is sitting up here and rejecting all the buyers. So then it pushes the candle down the volume, but you see it didn't come all the way back down to the white line. It's kind of making a higher low. So it's kind of a spin top. This is where you get indecision. Buyers are buying, sellers are selling. Buyers are buying, sellers are selling. So this is where you get those candles that are 50-50. But now it turned green again. So can the buyers continue to ask to buy at the high of the candle and maybe force it to go up a little higher? See the battle that's going on right now? And this is right before, this is right before COMEX market opens in the next 3 minutes. Okay, so and then count in your head. This is like visually, how many times did it come down here? And then how many times did you see the candle go back up green? Okay, I know a lot of traders don't pay attention to this. I do. I pay attention to each individual candle, whatever time frame I'm trading. So I've counted in my head 5 times already that it came down here and went back up. Now they're trying for the 6th time to break this resistance. Now naturally, if we can pop, it will fill to the next area of resistance, just naturally, just come up here. And also if we can close strong like a hammer, then maybe with this momentum, it will build to the next candle and open bullish ignited and then continue to move with COMEX market volume entering the market. So as we're watching this, we're going to watch this live going into COMEX. Okay, I want you guys to really get a feel of this and understand how everything is being built. You got a nice double bottom that was created off the low of the day, and we're battling right now this little flag area right here. Do you guys need me to remove this big red box? Is this kind of confusing you guys in the background? I just want you guys to know that we're trading in a daily resistance area with this big red box, to keep that in the back of your mind. So I want you guys to always understand that, yes, it's a nice little double bottom on the 5 minutes, but this is a huge daily red box that we're fighting through. Okay, so you see the answer now. The last 1 minute, who is now in control of this candle? Who is now in control of this momentum? See how it came up? We didn't really break. Those are those tweezer top highs. And then the sellers stepped right back in. So that's the buyers are getting exhausted. Every time they try to come up there, they're getting pushed down. And as they're coming down, look at where they're filling up again. The white line, that's our hourly support. So the hourly buyers are still there pending in the market getting filled. Okay, do you guys understand why I take price action very, very serious? These lines of interest, very serious. Now I'm seeing a third time it's coming down to where the hourly buyers are, not the 5 minute buyers. These are the hourly buyers down here. If they can continue to get filled, then maybe we're going to push back up. But if this red candle closes below that white line, then traditionally it might drop down. Okay, there's the close. Open green, flash red. Here it comes down. Now this is COMEX market volume. This is now, you've got added volume into the market now. The commodities exchange is opening up now. Okay, so you see red. We lost that hourly support. We couldn't break above there. So it's still traditionally following lower high, lower high, lower high. So that was just a little counter trade, maybe to suck in buyers right before COMEX market open. Now we got to see how deep down it will come. Will it retest our green box here? It's testing kind of the trend line we have right now. Some traders don't trade leading into COMEX. Some traders wait 5-10 minutes after COMEX. I just want to walk you guys through this. You guys make your own analysis. You guys make your own judgment. Now it's a red candle coming into what started that move. This was that big green candle, and that's where we said is about 50% of it. Okay, so you see now coming all the way down. So if these buyers had their stop losses down here, they're getting triggered right now. So we'll see. Will this get respected? Are the buyers going to be here? Or are the sellers still going to break through and push this thing down? Okay, so do you guys see, if you were in a buy prior to COMEX market opening up, that's why sometimes I pip and dip before a market opens, before a certain time of the day, because of this. I've had this happen to me millions of times where I'm scalping the markets. I'm not saying for intraday holds or swing trades. I'm just talking scalping 1 or 2 candles, where if you're up 10, 20, 30 pips, you got to have some sort of plan. Okay, so came down to our green box. Nice rejection, but where will this volume close? We still have the entire second half of the candle, 2.5 minutes to go. This was just the first 2.5 minutes. Are the sellers going to close it below this box? If they do, then unfortunately I got to flip that green box to red, because it might be resistance continuing to push down to the low of the day. Okay, so right now we're just kind of consolidating right in here. The volume has opened up now. I'm not in a trade currently right now. I'm just continuing to watch. I'll let you guys know if I do take a trade. Okay, see the response now. Okay, it came red, red, red into the green box. Big rejection. So we know that there was some initial pending orders that got triggered in there, buy side, and they pushed it back up, but we still have relatively big red volume, big body coming down. Okay, so where will this close? You know, like you see again, the buyers pushed it all the way up there, and then the sellers are continuing to push them down. So again, it's showing me sellers have control. You know, they're controlling those buyers right now. Currently, right now. But when this candle closes, we'll get full confirmation. So you see the sellers have now brought it all the way back down to the low. Again, they're going to push maybe for a new lower low. 40 seconds go. I always say the last 30 seconds is also very, very, very critical and crucial to watch. Who will have momentum going into the close of this candle and carry that momentum forward into the next bar? Okay, so sellers are in full control of this candle. They might close it right near the low. The next candle might open ignited red and fall a little bit further. Okay, with the momentum coming off of this huge selling candle. Okay, so if it closes below here, this green box, I'm going to just switch it to red because it might get retested and act as supply. So you see how we just flashed green, just opened, and now there's no wick below us, so it creates a new low. Will it have enough red volume to take out these prior low wicks? Where's the previous structure? It's right there. The purple line is the low of the day. See how it's red and just dropping through? It might fill all of those candles and create a new low, or in fact a higher low. But you see now how we're below the structure? So they kind of faked out the buyers prior to COMEX market opening up, and then they dropped it right back down. Did they come down to grab more pending buys down here to take it back up? We're back in this consolidated area right here. Okay, where we're right inside here, that consolidated area. Okay, good answer by the buyers. Came deep, deep. Didn't really break these wicks. Didn't come down to the low of the day. It came back up green, 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 but look at where it came right into, the red box. And the sellers are there, and they pushed it right back down. We're right back to the point of interest where this 5-minute candle, prior one closed, and where we opened. There's the volume at that spin top. Okay, and then now we watch to see, will it fill back up green? Will they close it back above here and start that next leg up with the buyers? Or are they going to continue to push this thing down? Sometimes we got to wait multiple candles to see what they're doing. I know some of you guys are getting antsy on YouTube and in the Zoom and saying, Ron, take a trade, sell, buy, sell, this, that. I understand. I know it makes the stream more exciting when I get into a buy or a sell. You guys watch me go into drawdown. You guys watch me go into profit. But that's not why I come on the live calls. I don't come on the live calls just to take live trades and hope for the best. Do you guys understand? Like, there's really no moment. There's no direction right now. The market to me is still trading sideways. There's a lot of fake outs right now. I don't feel comfortable even if I wanted to take a trade right now. I still don't know to take a buy or a sell. I'm 50-50. I'm buying or selling right now. So why would I just want to take a trade when I'm not 90% confident, when I'm not at least 100% confident with taking the trade? Right now, I feel like I'm guessing. If I take a buy, I feel like I'm guessing. If I take a sell, I feel like at this point in time, I'm guessing. And I know it sucks because it's our last stream of 2024 and we want to take a trade, but sometimes, guys, I want to show you that trading is not just always about hitting buys and sells. It's about still observing what's going on in the market. watching, keeping your eyes on the prize. Like we got to watch who's going to win this battle. Some of you guys might be selling the market, and some of you guys are buying the market right now. Like if I did a poll right now, maybe half of you guys are selling, half of you guys are buying right now. Maybe a little bit more, maybe 60-70% of you guys are leaning towards buys, because maybe you guys see that we're at the low of the day. We see that the 5-minute is making a little bit of structure. So maybe you guys are going into buys right now. And I understand that. I completely understand that. But the market could just be absorbing you and then dropping you right back down. So we got to kind of close above structure. We had one quick closure above that hourly resistance, but then as soon as COMEX opened, it dropped it right back down. So can we build our way back up there? See, sometimes I need the chat to be serious, guys. We're trading the financial markets. I know it's fun to joke around, but when you do it in a more serious mode, then you kind of take your trading to the next level. Alejandro, I see guessing is the key to become a millionaire. Let's go gambling. Like, I know you're joking, but there is a lot of traders that think like that. Believe it or not, there is a lot of traders that think they're going to become millionaires by gambling in the markets. And those are the traders I feel bad for. I honestly feel bad for, because they keep losing on prop firms. They keep losing their own money. I had a one-on-one with a trader 2 days ago. He's lost $30,000 in prop firms. 30,000, I will repeat, 30,000 US dollars in buying prop firms and gambling with them on every single one. Guys, 30K. That's a lot of money for him. That's a lot of money for anybody. $30,000 in buying prop firms and blowing them up with that mindset. And then he said to me, Ron, that's it. Like, I gotta stop gambling in these markets. But you guys see like comments like that. There is traders that are really suffering from that. So I don't take that like funny. I don't take it as be serious when you're trading. Treat this like a business, not a casino, guys. Otherwise, you're just going to keep doing the same mistakes over and over and over. There's a time where you got to put a stop to this and just you got to learn this. It cannot be taught. I'm telling you the truth. No one taught me this. You got to put your foot down and say, this is enough. I'm going to take my trading serious now, and I'm not playing any more games. Like I told you, I could have just guessed a buy or sell, but I don't feel confident. Like I'm not doing it to impress you guys on the calls here going into buy or sell. You see how it's just trading inside here. This might be like a little head and shoulder where they faked out the COMEX volume here, they spiked it out, came back down, and then this is where all the buyers that are accumulating, they can go against them and drop it for the low of the day and go against them. Okay, I'm not saying that that's going to happen, but that could be one fake out move. Yeah, 30,000 is someone's annual salary, 100%. Yeah, just giving it away. Like think about the financial stress that's on their plate right now. Like it's not easy. It's not easy, guys. But that's trading. It all depends on how you want to go approach your trading. That's why it's always be serious when you're trading. Because if you start to joke around, you're going to start to joke around with your trading. Stay focused. I know you're probably just joking, and I know I joke around too, but I'm just trying to show you that the real side of it, traders are definitely really, really affected by things like that. And it happens. I don't wish it on anybody. It's very difficult to come back from that. Not a lot of traders can, if they ever do come back from situations like that. Elevate, your first few days of trading, do I got any advice? I have a lot of advice. Take your time. Open up a demo account. Learn. Education, learn. Watch some tutorials, watch some YouTube videos. Learn your mindset, psychology, risk management before you even take a trade. Listen to all of us. A lot of us are, if we could go back and teach someone right now, if we could all give this person, Elevate, some advice right now from where we came from, you guys, what advice would you give this person who just started today? Like after everything that you guys have gone through, what advice would you tell this person right now? If we could all give him a piece of advice, to make his holidays better and give him something to look forward to. Use a stop loss right there. Some traders that start trading do not use a stop loss. That's a good way to start. Don't forget to back test. Absolutely. Go back and back test. Journal. Learn consistency. Okay, so we got buyers bringing it through here. Let's watch this candle. It's going to close with 30 seconds to go. We're right back up to that hourly resistance. Okay, so if we can close with this green candle coming above, I'm going to change the color of this red box to green. I'm going to do it right now because I believe that this candle will close in the next 10 seconds above. Okay, so the buyers are still here pushing it up. Let's see if maybe we get a pullback buy, or maybe if we get extension coming through here. Here's the close. It's closing right near the high. So we got an ignited candle. Again, it closed right above our hourly white line. So we are bullish. So this candle might have the momentum to continue to break through. Okay, if it does, let's see if it can break this resistance, create a new high. Then what that's telling me is the buyers are in fact here. They're building off the bottom and they have enough volume to take out a previous high. That right there will change the depth of market. If we can continue to break a new high, then below us, the depth of market is going to start to build. Now, do I want to buy the high of this candle and try and break that high with an impulse, or do I want to wait for maybe a pullback to buy somewhere down into here? Maybe that's what I'm going to do, okay? But the candle opened ignited. It pushed. You see, it couldn't break right there. It got rejected, came back down. It's still picking up its buyers, still has the ignited open, and now we're coming right back up to try and attempt to break this. So you guys that said buy, so far it's looking good. Some of you guys that were selling, you can see now it didn't really break any of these lows and come down to the low of the day. So the buyers now, in my opinion, buyers right now are controlling the price action currently. But we need to see it break above here. This is the previous high resistance. Right now with this candle, let's see it break. Okay, there's the break. Now, it created a new high in this entire trend. This one that went up here, it pulled back, it came back up, they rejected it, came back down, it came back. So we just see that peak where we kind of peaked above there. That's created the new higher high. So when you create a new higher high, there's going to be some resistance up there. And you see how they pushed it back down. But keep in mind that it did create a higher high. We need that to continue trending higher. You have to build higher highs and higher lows. Okay, now it's going to come down to where this volume will close now. Okay, the sellers pushed it all the way right back down, but the buyers, again, are they still going to be here to push it all the way back up and close it? Now this is a critical candle that we got to watch and see where it closes. Half the candle is exhausted now. You see, all of that happened in the first 2.5 minutes. Now we have 2 minutes and 20 seconds left. The second half, kind of like a NBA basketball game. The first half was controlled by the green team. Now they go into halftime, they have their pep talk, and then they come out to finish off the second half. Will the opposite team control the second half and push it back down, or will this team continue, the green team, continue to build it back up, close it here, close it at the high, close it as an inverted hammer, keep the volume above this white line, above the hourly support? all of these things are going through my head every single time I look to initiate a trade. Are we going to flag inside here now for a little bit? Okay. So if we just talk from the low of the day, we bounced off the low of the day. We got 5-minute rejections right here, higher low. We're above this green body, this green box, and we're now fighting to break the higher time frame resistance right up here. And then the buyers, look at how they brought it all the way right back up to the resistance. And let's see if they can close it strong above here. It's good lessons on price action, guys. Okay. I know gold might not be the greatest security to show this because gold sometimes is very, very choppy, but I guarantee you're going to see this pattern with anything you're trading. We'll go into the indices in just a moment, Sonia. I just don't like leaving off of a security when we're at a critical point. We went through this entire thing, now we got to stick with it. Because I don't want you guys to miss what could potentially happen up here. So now 20 seconds to go. The last 30 seconds, I always say, watch who closes. Watch the momentum. Okay, so we're coming right back up. Gold has a mind of its own. Yes, I agree with that. Okay, so first thing I also look at is the size of the volume. Open, close, half of it, red line right there. If it does pull back, I want to see if the buyers will be there at 50% of this pullback. The candle opened ignited green. There was no pullback. The size of the wick does matter. It's it's half the candle, the wick. Okay, so if the buyers continue to push it up, they got to fill this wick in order to go against this resistance, which they could, but it might get rejected, and then I want to see maybe a pullback right into here or at the hourly white line at the bottom of this consolidated box. Indices are coming down. Dow Jones. I was just opening markets over the holidays. A lot of selling might be coming out of the markets. If you guys want, guys, I can switch. No worries. Okay? And then you guys just figure out what's going on up here on your own. Would you guys like me to switch to Dow Jones or NASDAQ? You guys tell me. For me, it doesn't matter. Switch? Okay, guys. Okay, but you guys got to understand we're at a critical area here. Okay? Pay attention to gold. This could be the breakout. Let's take a look at US 30. Okay, so US 30. I listen to you guys. If you guys want to go off, for me, I would have stayed with gold. I would have been coming to this more towards Wall Street. Anyways, okay, let's get some zones. What's going on? All-time high up here, 45,000 and some change. It got rejected. See how many times it consolidated in here? Green, red, green, red, green, red. They closed it below, and there was the big drop. I'm sorry, guys. You guys, I can't do this. Flip-flopping, gold, this, that. I'm gonna do what you guys say. If we want to see this, we do this. I'm just telling you, it was at a very, very critical time on gold. You need to be watching that area. Okay. Do we have some demand on gold? Yes, right here. Right here, holding. Okay. Is there another pivot? Yes, there is. Right over here. Just look at the structure to the left. There was resistance. Turn to support. Turn to resistance. Bring it into the future. It's a red box. Okay. So this is now where we're trading. Okay. So it pushed all the way up, all-time high. It pushed it all the way back down. This is similar to like gold last week. Thursday we had a push. Friday we had a push. It got rejected. and now we're pushing right back down. So let's just follow now the volume of Dow Jones right now. If you guys know, there was a big news, something that happened over here where unfortunately the CEO of United Health got murdered, and United Health holds about 10 to 12% weight of the entire Dow Jones, and that's why there was a lot of selling pressure on United Health. So that could have been why the Dow sold off. Not 100%, but okay. So let's follow the volume. What happened on Friday? We opened, it was red. We came down here, took out a low in this green box, filled back up to the opening price, came back. Look at the high of the day on Friday, right into that red box, pushed down, we closed. Where is 50% of this green volume? Okay, you can bring your Fibonacci tool if you like, or you can just eyeball it. Where's 50% of that volume? I place a yellow line, 0.5 right there, 42,605 and a penny. I get rid of my Fibonacci now. Now I got the 50%. I don't want a white line, I want a yellow because I'm on the daily. Let's follow the volume now. Okay, so I can see a gap. We closed Friday here. They gapped it up. You can see the gap in the market. Okay, it might not be significant, but it is like a 20-point gap. But it's filled already. So that was our kind of opening price up there, point of interest. Like right in here, you can go halfway if you like, whatever. And it was green. It was buyers were in control of the opening price. It was green, 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 where it made our high of the day. And if you look to the left, when it made our high of the day, it's got a lower high in the red box. It's got all this heavy supply pushing down. So maybe it was just a 2-day counter pullback, and they're going to continue to push the market down going into today. So when you ask me why is it dropping, it could just be continued momentum dropping the market. Was there any news at 8:30 that could have affected this, or is it just naturally how the market is moving? Okay, if you ask me, overall it's bearish. It came up, back down. Now it came all the way down to the low of the day. There's our low of the day. It's still above 50% of Friday's bullish volume, and now we're coming right back up. So what I'm going to look at today on the Dow is, are the buyers going to continue to push up all this red volume, come back to the opening price and go further? But if they do, they're fighting all of this red volume and they're fighting the resistance. So naturally, maybe the market is just going to come back down, sellers in control to the low of the day, and come down into here. So now if I want to dissect into this daily candle to figure out what's going on, I go to the hourly. See the huge drop over here, Wednesday, 2 p.m. That was FOMC. If you remember, Powell came in. The market tried to recover, but lower high, too much supply above us, pushed down. We tried on Friday, big day. Friday was a good recovery, but we traded right back into that FOMC supply, and they continued to push it down. Now, just going through these candles, 2 a.m., pre-London, there's London. Guys, if you look at like hourly structure, you can see that there's hourly structure, a white line right there. There was a body, a wick, a body. When did it close below? London. London pushed down, closed, continuing to drop, continuing to push down. Now it's retesting. It came up 7 a.m., retested that daily point of interest, pushed right back down. 3-bar play. 8 a.m., continuing to drop. That made our low of the day. What are we trading into now? Now it could trade right down. Where do we have some hourly maybe support? Right here, 42,500. If I look from this green line to the yellow line, half of it is right there. I've got bodies right here as well. Where would I place a white line? Right here. Right there. There's a body, 50%, and then I look at the number 42,497. I'm off by 3 points from 500. So if we cannot hold 50%, remember that point of interest is Friday's green volume. sellers might have potential to bring it down into here. If we can continue to hold, maybe we'll see if we can reverse our way back up. There's 12 minutes to go on this hourly Dow candle. So when it closes, wherever it closes, I would place a white line exactly where 50% of the volume is on this red candle to see where the resistance is. If I go into the 5 minutes right now, look at the 5 minutes, or continue lower low, lower high, lower low, close below 5 minute structure right here, pull back, continue to drop. Okay, now this is what we got going on. Do you see now the 5 minute structure right there? If you can't see this, we got to go to the doctor and get our eyes fixed. See the pivoting point right there? Stopped, came back up. This body that opened at 8:30 closed, ignited below it, and continued to drop down. So that is an area of resistance right there. If the buyers come all the way back up, that's where possibly they're going to get rejected. I might have like a pending sell order waiting right in there. If the buyers bring it all the way back up, that's where potentially it might go back down. Now, do we have some point of interest on the 5 minutes? Yeah, right there. Body open, closed, and opened. Now we might get some. Again, we're at the low of the day, just like how we were with gold. It's at the low of the day. Maybe it needs to consolidate in here for a little bit. Maybe we got to find our buyers again. Our buyers might be getting getting absorbed, and then they might drop it back down. So right now it's building. There was that drop. I got to watch how it builds. Will they close it above here? Will it build some type of bottoms down in here? US 30, if you are buying, you're going against this entire trend. Okay, there's a few. There's that one. There's this one. Like, you're going against all of that. Okay, so you can't just buy because something just drops. It's not a good habit to do that. I need to see if the buyers can close it above the next resistance point and build off of it. Otherwise, they might just get absorbed and then dropped right back down. Okay, we'll put these two side by side. Sorry guys, 1 second. Let's just go back to the gold. Okay, so gold broke out of here, closed above. Now it's retesting this. Let's go back over here. Oh, I guess my other chart won't come up here. I just got to flip-flop. I'll go back to US 30 at 9 a.m. We'll watch US 30 at 9 a.m. Okay, so gold, let's just talk about this. Gold closed above this point, and now it's came down, retested it, pushing up. Remember, resistance is above us. Again, it came down, held, and we're going to see if it can continue to push up. New area of consolidation right here. Okay, I'll get rid of these red lines. Focus points are this hourly white line. If the sellers push it back down, maybe we can potentially take a buy at this white line. I'll buy the pullback down in here. If it can't hold, I'd like to buy this pullback down into this. I might miss out. Maybe there is no pullback. Maybe it continues to go where I can't get in with a pullback. So sometimes that happens, guys. Sometimes you're waiting for a pullback entry and the market never pulls back to you. It just keeps going. If that happens, it happens. How many times do you chase and you chase the highs and then it goes down and you're in drawdown? So I don't play those games like that. The would've, could've, should've. So I'm waiting patiently for a pullback buy. If I don't get it, the market moves away from me. I'll look for another one. Elevate. This is confusing. Yeah, trading is confusing. You said it's your first day here. It's going to be confusing. If I go learn how to be an engineer on my first day, it's going to be probably pretty confusing. If I go learn to be a doctor on my first day, it's probably going to be confusing. if I try to be a mechanic on my first day and I go under the hood with not knowing what a wrench is or anything, or to know the tools, yeah, it's going to be pretty confusing to work on an engine. So I don't understand why traders think that they can just come in for the first day and learn all about trading and become a millionaire. Just think about that concept. I can tell you right now, that's why there's so many traders that fail, because they think that they can just come in here on the first day and pick this up and become a millionaire. This takes years. Some of us have been doing this for 10, 15, 20, 25 years. Imagine that, guys, if we could learn this on our first day and make money. Holy shit. I just wish, for everybody that could happen, but it's not. This takes a lot of hard work, guys. I cannot believe that you guys don't know this yet. Like, I would never say that if I was trying to become a mechanic, if I was trying to become an engineer, an electrician, a plumber, not knowing anything, just going with a plumber right now today. If I was to go with a plumber and say, I'm going to fix anything you do with no experience, not reading a book, not watching what he does, what do you think I'm going to do? Obviously, I'm going to make mistakes, but I don't know why trading has this bad image that you can come in here for 5 minutes and learn this. We just did a webinar. 5 minutes to learn and a lifetime to master. You can learn this in 5 minutes, but it will take you a lifetime to master this. I don't know. It's I'm trying to be honest and truthful to you guys. You know, some of you guys might say, Ron, oh, you're being an asshole. You're being too hard on the guy. I'm trying to speak the truth. I don't understand why people think that what we do here, you can learn this in a day. It's not the right mentality, guy. I don't know who's lying to you guys. Yeah, because of Instagram, they show Lamborghinis, but it's all bullshit. Like, you guys got to understand that. That's all just gimmicks to get you to, like I can go all day and go to the Lamborghini dealership and make videos and show you guys Lamborghinis all day. I could do that. What is that going to prove? It's silly. And now what happened to the volume? See now how it's just kind of consolidating in here? So it broke. You know how much momentum it took for the buyers to break this resistance? So now the market is kind of catching its breath. It's like you and I. If we go out and we run outside and we go for a nice jog, some of you guys are in better shape than me. You guys can go longer. For you guys that are out of shape like me, I can run for a little bit and then you're going to see me huffing and puffing and huffing and puffing, trying to catch my breath. That's what the market is doing here. It's trying to catch its breath again. That's what consolidation is. That's why we trade sideways. But if it's still building and our buyers are still interested, then maybe while the market is cooling off, it's still building momentum and can continue to break through this resistance. But we're going against a current trend, so it's not easy. Yes, Sonia, I know. It took you 5 years to be consistently profitable, and I've been working at it faithfully. I know exactly how long it takes, how much work you guys put in. That's why I just don't want to mislead traders to think that you're going to learn this over the weekend and you're going to be successful. No, most traders are not successful. They're not successful for the first 5 years. That's the truth about trading. It comes down to how bad you want it. Excuse me, guys. Yes, and some people learn in different ways. Guys, you got to watch this webinar that we posted. It's on YouTube. It's the journey of a trader. Everyone on Zoom. It's posted in the website. I'll show you it real quick. I highly recommend everybody, please just watch this over the holidays. Might give you a better perspective of your trading. Over here, guys, it's in right here. Okay, it's second one right under our Super Systems Theory of Trading, Journey of a Trader, right here. You're going to go through these years. Some of you guys might not take the entire 5 years. Some of you guys might do this faster than others, but you're not going to do this in a day. So typically your first 5 years are your beginning phases. Your initial challenges and foundational learning. Your next 5 years, 6 to 10 year mark is the turning point. Okay, it's kind of like a pivot or trading in your career. Your next 5 years might be your 11th to 15th year in the markets, your growth phase. This is where you're significant developing and enhancing your skills. And then your final stage is the last 5 years, your resilience phase, where you're mastering adversity and sustaining success. Some of you guys might do this entire 20-year process in 5 years. Some of you guys might do this entire process in a year. It all depends on how serious you are about the trading and how serious you take it. The YouTube, it's on YouTube. The video is on YouTube. But we will be taking all of our webinars down and putting them in our website soon. Okay, so now what's going on? There was a nice move by the buyers on gold, but came back up to this resistance, to the previous 5-minute high up here, and you see they're getting rejected and coming right back down. So gold is making some moves, but it's just consolidating in here. Let's take a look at US 30 real quick. Okay, so US 30 as well. It's still just kind of consolidating. But if I draw a line at the 5-minute support, it's building a little bit of support here. There's a body, there's a body, there's a body. We're barcoding. Green, red, green. I think we need to wait another 30 minutes to go into Wall Street to see what's developing. Okay, I can already maybe predict the pattern already. Okay, we had this steep drop. Now maybe we might come back up to here and consolidate here. Maybe they push it back down, but then I want to see, will we get a second bottom at the low of the day, maybe respect here, and then we get similar like gold, and then maybe Wall Street, we're moving up here, and then it breaks out bullish like that. Or it's just going to continue dropping. And these are just sucking in buyers. And it drops, consolidates, maybe come back up, and we drop further, close, and then consolidate, and then they drop further. And it's one of those days where it's just continuing to sell. So we have to be very, very careful, okay? Sorry, guys, I have a sore throat. So I haven't taken a trade yet. I don't really see anything yet. Still waiting. Yeah, I believe you, Hot Dusty. Markets are too risky now. Could be setting up lots of traps, trying to get retail money. It's best to stay out until 2025. I learned the lesson the hard way. I completely agree with you. After this call, guys, I will not be taking another trade this year. I'm going somewhere hot and sunny. I will not be bringing my laptop and looking at the charts. I will be enjoying time off of the markets, as should you guys. I believe that, guys. Take some time off, unless you're going to review, study, that's different. But to be in these markets and try and squeeze out a few more pips, you might do something that you're going to regret. And I'm telling you, it's not the best time to be trading. Just let this week go by, start a new year, new volume. You might regret it. Okay, backtest. Look at the last week of last year. Look the last week of the year before. Look the last week of the previous year. How was the market trading? Remember that there was traditionally like a Santa Claus rally. I know some of you guys have heard that, where the markets rally into the end of the year. Maybe this might be a different, maybe the Grinch rally where it's not Santa Claus, and it might be where the markets sell this year, okay? Not every single year is going to be always a Santa Claus rally. If we have that in our head, then we're programmed to always think that, and we're always going to buy. And then maybe the market makers are playing chess and say, okay, all these retail traders always anticipate Santa Claus rally. They're always going to buy every single dip. Let's just continue just supplying the market and keep hammering them down and make them think about it when they're in drawdown over the holidays and open up the new year bearish. Like, do you guys understand how think like a market maker, how they position themselves, how they engineer moves in the market? Are we seeing a Santa Claus rally right now in the markets? Not after that FOMC where Powell kind of scared the markets. Just keep an open mind that this might be a Grinch rally. Keep that in just in the back of your head. Maybe I'm wrong, but what I say is, if it's going to be a Santa Claus rally, let's see some buying volume. Where's the buying volume? Show me where the buying volume is. Let's see the buying volume, the daily volume come back into the markets. We should see 4-hour volume start to come in today, later today, and see where's this volume. All I see as of late is red volume. Okay, so we can, again, let's take a look at Dow. Okay, so Dow is building. It's pushing up. Will we close with volume above here? Or is it just an impulse and then they bring it right back down? Got about 20 seconds to look at this. Okay, so this is the first bottom. Now, I always look for 2 bottoms, 3 bottoms are better than 1 bottom. Right there, that's traditionally 1 bottom so far. And then I also look, we're about 20-25 minutes away from Wall Street. Okay, so I just kind of think what they're developing. Now they just brought it right back up. So maybe we might come back down. But if we do, are we going to make a higher low? Is it going to be a double bottom? Are they going to take liquidity down to the low of the day right before Wall Street? Or they've got enough volume that it's time that they're going to maybe push it up. And then maybe Wall Street opens and then they dump it. Okay, so there's multiple things that can happen. Multiple. And then if I'm trading a little bit going into a open market, like Wall Street is a big session. If I was trading going into red folder news, I would reduce my risk and take a smaller trade, because that's when the bigger volume will come into the market. I like to maybe watch how things are moving to go into Wall Street and trade after the fact once Wall Street market opens. But sometimes we get caught in trades leading into going into one of those exchanges. What I do is maybe take a smaller trade just in case it doesn't go where you think it's going to go. Okay, so I'm just going to increase this consolidated box maybe here. Maybe we consolidate below this supply and we're building a little structure here. So I will revisit US 30 in the next 5-10 minutes, but let's just let it continue to build. While it's building, I don't need to be trading the volume. I can be a spectator on the sidelines and continue to watch what's going on. Gold is making a nice move. So where did gold come back down to? It touched our hourly white line. Hourly white line is our hourly support. So you see how it's building. There's a depth of market. So I can start to draw a green box above that hourly white line. So did it come down to our previous green box down here? No. So what it's telling me is the depth of market is building stronger for buyers. The buyers are stepping in at the hourly. They're protecting this. They're building a higher low. Okay, so let's see if they can continue to break it up here. But every time we're coming in here, they're coming in resistance. Coming up, going back down. Coming in here, they go back down. Come in, they go back down. They come in and then they drop it all the way back down. Here's where we had that recovery. We came green, 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 and again they're pushing it back down. Okay, so we got to now see, will we pick up more buyers? Will they come back in strong? Will they be able to break through this resistance, close it above here? Or will we lose our hourly support and then maybe we'll have another leg come down in here? Okay, we're consolidating right at the neckline here. Gold is still building. And then let's just go through again news if you're just joining us. Okay, so what's going on? We had some Canadian news, not too important for the financial markets. 10 a.m. Okay, so we're gonna have Wall Street market open 9:30. Then 10 a.m. You do have some U.S. folders, consumer confidence, and new home sales. Okay, these are previous months numbers. Okay, and that's all we have. And then if you are trading tomorrow, just remember tomorrow markets close early for Christmas Eve. Just hopefully some of you guys will not be trading Christmas Eve. And Christmas Day, everything will be closed. And then Thursday, again, a half day. And then Friday, markets open regular hours. Okay, so let's just take again look at US 30 here. Okay, so US 30 might just trade inside here. Maybe are we going to get a second bottom coming in? Or they're going to push it all the way back up to this upper resistance. Again, if you're buying US 30, you're counter trading all of this bearish momentum. Okay, if I'm looking at this trend, it's pushing down, pull back, lower high, new lower low, pull back, lower low. We could pull back, and again, they drop it back down for a new low of the day. Okay, so let's just be careful, guys. And gold is still building. Okay, so have we lost any support of our buyers? No, they're continuously building. That was a red candle that traded into 50% of that previous green volume, and we're still holding our hourly green zone. So to me, the momentum could possibly be switching, and we might have a possible bearish to bullish reversal on gold building. This was the bearish move. All of this could be that move, but remember this yellow line, that's a critical daily point of interest, 26.21. Can we get volume to push, maybe close, retest this, and then we have enough to break there, and then we're going to trade maybe 26.23 right into that 5-minute sideways action, maybe the top of that supply box, 26.25. That would be good, nice recovery for gold if we can test up there. For you guys that are buying, I hope we can break through here for you guys. I didn't see too many of you guys were selling. I saw most of you guys were buying gold. So see how we're building structure. We haven't lost any structure. Our hourly white line, see how it's strengthening. Okay, guys? You got to also understand how the depth of market builds. Sometimes it builds really slowly, sometimes it builds really fast, depending on the volume. Rob, DXY is dumping hard. Okay, so then we have a weakness on the US dollar. That's traditionally correlated with a bullish move on gold. Maybe we will see that. Critical zones for gold too. Borix, what do you got? Where are your zones? Are you around here, Borix? Like the yellow line, 26, 21, 20 area? $26.20 buy zone? Yeah, so you're right below that. Okay. Yep. Joseph, you're looking to sell gold? Yep. I don't. Like this is a nice little bounce back, but still, look at how much we have above us. Okay, there's a lot of selling pressure. So maybe this might be that move that the buyers took them a while, and then comes up here, and then the market sells back down. That's a possibility. That's why I have it marked as this yellow point of interest, 26.21. And we're still in this big red daily supply zone. So just on the 5 minutes, since 6:45, it's been building slowly, but sellers could step in and drop this down. But if we keep closing above resistance, maybe we can continue to slowly break through here. And let's just see what's going on in pre-market trading right now. Remember, there was no big earnings today for the entire week. Tesla's up 2.3% right now. Just trying to look for some big names. Not much going on. Go to US 30 real quick. Okay, so US 30 closed, pullback, still holding. We had another bullish push right back up to here. It's in this consolidated range. To me, this is a neckline that's building right before Wall Street. So if we look at this move, we had that 3-bar push down, very bearish, big 3 red candles starting at 8:30. Then we're pulling right back up. So this is what's forming the neckline. Will we come back down, form a higher low, double bottom, or we're going to lose all this and continue to drop, maybe pull, and then it's a bearish move for Wall Street. So just pay attention, guys. If you're learning, for some of you guys said this is your first day here. This is what I would do. I would pay attention to figure out, like we figured out kind of how they were building gold going into COMEX and then how they reversed it. What are they doing with US 30 going into Wall Street? So they dropped it down. Right now it's building slowly. We're about 15 minutes away from Wall Street. So are they building it and then they're going to drop it down when Wall Street market opens? Okay, so that's what I pay attention to. And then maybe I wait 5, 10, 15 minutes after Wall Street market opens, figure out the move, and then trade with that move the rest of the day. But right now it's just trading sideways in here. So again, if I take a trade here, if I buy or I sell, I feel like I'm just guessing at this time, where it could go up, but then Wall Street could slam it down. Or it could go down, I go in to sell, and Wall Street could bring this thing right back up. So right now it's just trading sideways, forming a neckline. So to me, there's no real direction. So again, I stay on the sidelines. I continue to wait it out. Gold now came up, rejected, came up, rejected, came up, rejected, and now they might be pushing it down. So this might be one of those double top patterns where it came up, there's one top, there's our neckline right there, the hourly support. It came back up, okay, got rejected. There's like your M. So will it come back down red and close below that hourly support, turn to resistance, and then maybe gold might drop back down? Okay, but it's still holding. When it came down red, 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 buyers are pushing it right back up. Higher low, higher low. The volume is still inside here. So even gold now is developing, leading into Wall Street market. We might see some moves. And if you go, now this is also, if you want to clean up everything, get off these 5 minutes and go to the daily, go back to your daily time frame and look what's going on the daily candle. Okay, if you don't feel comfortable looking at all those 5 minutes, the daily candle is a spin top with bearish volume. Remember, it opened green, 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 came up, made the high of the day, we came back down, made the low of the day, it came back up, but there's still this red volume. So remember, the buyers, those 5-minute buyers are trying to push all of this red volume. There's that white hourly line, so we're above it, but we still have the majority of this red candle that could just come right back down today. Okay, so that's the daily candle. It's indecision right now still. Hasn't really flipped. That's why I'm looking at that yellow line, 26.21. If the buyers flip that, that's where we could turn green. That's where Forex is looking to buy above that yellow line. Okay, that's the daily opening price. If we do the same thing for US 30 and we look at US 30 on the daily, this is what we see. We see a huge, massive daily drop. They flushed it out right here on Wednesday, FOMC, and we slowly came back up, but then look at today. They gapped it up, came back, high of the day, pushing down. So if you're trying to buy US 30 right before Wall Street, you're buying against this big red volume that could literally just come down and absorb you and keep dropping. Okay, so I know how it looks on the 5 minutes. It might look bullish on the 5 minutes, but you got to understand you're buying into that selling volume on the daily. And that's where they could absorb you and then drop it. Okay, so you have to be careful. Same with gold. That's that yellow line. That's what could change the entire day's momentum. That's why that's my daily point of interest right there. Okay, so we'll stick with gold for about 5 more minutes, and then we'll move to US 30 to watch how it opens for Wall Street. And then we'll go till 10 a.m. And whether you guys trade after, there is a couple orange medium impact folders. NASDAQ, Ifrin almost looks the same right now. Yep. Okay, so gold is still consolidating here. Let's watch US 30 so we can get a good feel of how this thing moves into Wall Street, okay? And Wall Street might have significant volume. Okay, look at the size of these candles right now. These candles might be 5 times this or more the size of the volume. Okay, so if you're trading these things right now and you have a stop loss, like if you're buying and you put your stop loss below here, when Wall Street market opens, if it's a red candle, it might easily take out your stop loss. Okay, if you're selling and you got your stops above here, you might get stopped out, and then so just be careful. Okay, if you are trading before or after. So this to me looks like we've recovered. We made one bottom right there. We're coming right back up to resistance. Will it break out? Will it pull back? Are we going to continue to drive? We will find out very, very shortly. If you are in a trade, please, guys, look after your own risk management. That's all I can say. What is everybody doing after today's session? Jay Robinson, the real move on gold was during London. Yeah. Sleeping, Rob, right after this. Anyone have plans over the holidays? Sherry, you're working. Sean, going to Costco. Good luck with that. I went I went yesterday. My God, it was a circus in there. An espresso, Mark. Nice. Motorbike exercise. Good, good. Ifrin, relaxing with the family, but might go to the gym after the call. Yeah, nothing wrong with that, guys. Hit the gym. I've kind of outfitted my entire garage into a gym. So been making that for the last few months. So it's a gym, have a sauna in there, have a TV, fireplace, like a lounge. Maybe I'll stream in there once in a while. It's a big man cave in there. You guys are welcome to come. Oh, the sauna's the best. I put the sauna on, get it up to 60 degrees, and I work out for about 45 minutes. And then when I'm all done the workout, I just jump in that sauna, enjoy the time in there, put an audio book on, and just relax. And it's got the infrared red light. I got that for the wife for anti-aging, but I do use it. It's nice, guys. If you can ask Santa for a sauna, I would highly recommend it. It's good for your health, guys. Good for everything, for your skin, for your everything. I love it. I used to go in the sauna at the local gym, and I always wanted to have my own sauna. No, it's not a steam. It's dry sauna, cedar wood. If you're sick, go in the sauna, kind of sweat it out. It's just good to relax in there. Okay, so we're almost 5 minutes away from Wall Street. Okay, and gold is still consolidating. We might get that punch coming out of here, but also understand, guys, if it does push down, we are coming off of selling pressure, so there is supply above us, but we'll see this will be the first line of support here, this kind of green box. This will be your second line of support to see if these will hold. Right now, see how it's just consolidating before we get into Wall Street, but we'll be watching Dow US 30 going into Wall Street right over here. Okay, so it's 9:25. This is our final 5-minute candle going into Wall Street. So it's been a nice move since about 8:45, where the buyers have recovered almost 3 of these big red candles. Okay, so the market came right back up to this previous drop. Will we build off of this? Do we have an area of support? Yeah, maybe right around here where these bodies are. I'm just going to draw a green box in here. If we pull back in here, this might be an opportunity to maybe buy. If it pulls back red, 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 maybe I'll buy this green box to take it back through here. If it can't hold this green box, then we're going to come back down to this 5-minute structure, this red line. Body, 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 and a wick. This is where the market recovered from the low of the day. That's the low of the day right there, 840. So they're building slowly and bringing it up, but they're going against all of this resistance. Okay, and also look for how this candle will close. Look for fake outs. Okay, look for clues. You don't have to trade the opening of Wall Street. You can now make sure set up a plan right now. Are you going to wait for the first 5-minute candle to close? Are you going to wait for the first 15 minutes of 9:30 to 9:45 to look to trade? Are you going to wait till 10 a.m.? Like, everybody should have a plan. You shouldn't just guess right when Wall Street market opens. That's not necessarily the best plan. Some of you guys might also be on the lower time frames. You guys might be trading 1-minute candles. Okay, so you might be entirely different than what we're looking at over here. Okay, so the buyers are pushing. Will this previous area turn to support? Will this candle close above and start to break through? Right now it's breaking that trend line that we had coming down from here, 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 and here. So we're slowly breaking through it right now, leading into Wall Street. So that's showing a little bit of bullish momentum on the buyers. But then when the market opens, is it going to pull back? And then we find, will this be support? Will this be support? We're kind of moving away from this consolidated box. And understand that the volume will increase, okay? So if you are in a trade, you got to understand that it's going to open up. The range will be much larger, so your stop loss needs to be larger. So therefore, maybe reduce your lot size to compensate for that. Okay, so impulsively broke out. Sellers are pushing it back down. Where will this body close? We've got less than 2 minutes to go. It looks kind of like a sharp V recovery where it just came down right there and came right back up. Okay, so will we continue to move or will it pull back? And then do we find a higher low here? Do we find a double bottom here? Or they're going to come and take out the low of the day? And make sure, guys, if you are trading, you have the proper lot size. Okay, don't make no mental errors. Make sure you're on the correct security. How much money do I earn in a day? I earn $1 billion every day. $1 billion. Like Dr. Evil. $1 billion every day. I know it might be a lot, but that's good enough for me. More than Elon Musk. Dr. Elon. Yeah. Just some pocket change. 1 billion every day. Just some pocket change. Wouldn't that be nice? Okay, guys, let's not ask stupid questions. Let's get serious. This is Wall Street. This might be the last Wall Street of 2024. Serious, focus. Ron doesn't make $1 billion a day. Let's get focused here. Strap in. You're right. Put your seatbelts on and enjoy the ride. Here we go. Green, bullish. Wow. Fake out. Okay. Boom. Green, flash green, red, drop. They're going after stops. Okay. Came down to our green box. Look at recovery. This could turn into a bullish hammer. Watch. Will it break resistance? Will it come back down? See how quickly. Okay. It's coming. They're going to push out. Will it come back down now? Okay. That's the thing. Could it come back down? If this is too fast for you, wait for this body to close. This might be too fast. I completely understand. Okay, let's see where this volume will close. That was the first 30 seconds. Okay, we're pushing through. But did you see how they flashed it green, red, came down to the green box? If you had a pending order, it's activated, you're in profit. Okay, you made your $1 billion today. But if you're not in, let's just see where this volume will close. I'm continuing to watch. It broke through this resistance. Will it come into this resistance? Look at that hard rejection. Okay, so all of this shit, just let's take it in for 5 minutes. See what happens with this. Okay, look at the range. What did I tell you? It's going to be about 5 times the size of these other candles. Way too fast. Okay, good. At least we're on the same page. I agree. This is way too fast. But some traders have to trade this, and they cannot stop. To me, let's just wait it out, see what happens. Okay, look at that now. Now the entire volume, the candle flashed red. So it's a spin top. Okay, so there's 50-50 on this. Buyers are buying, sellers are selling it down. Buyers are continuing to fill it up. Will it close up here? Will it close down? Will we be able to buy a pullback? All of these things, okay? If you're using a stop loss, like just look at the range of this candle right now. From the high and low, this is a 90 pip candle, 90, almost 100, okay? So it's not like your other little ones here that are 20, 30. This is a 100 pip candle. Okay, so if you're trading with 10, 20, 30 pip stop losses and you're on the wrong end, within the same candle, you're going to get stopped out. So this is where I mentioned reduce your risk. Palantir reached an all-time high of $82 right now. Palantir, MicroStrategy are added to NASDAQ 100 as of today. So those institutions will be forced to purchase those securities. What time frame are we on? We're on the 5 minutes. 5. Okay, so we still have 2 more minutes to go into the close. So do you guys remember that candle flashed green when it opened? It went hard red right into this green box, picked up all those pending orders, came back up green, so that's the high of Wall Street, and then they slammed it back down. Now it's just this volume that's fighting in here. Where will this closing volume be? Above this box? Will we turn this one green? Will we build off of it? Is it going to close red below here, and then maybe we're going to sell back down? Look at it, might be just an indecision candle the first 5 minutes of Wall Street with large range. Okay, look, so no real direction. Did you pip and did you dip out of that candle, whether you were in the buys or in the sells? All of these questions, okay? There's all of these questions. Maybe some of you guys didn't react fast enough, and I understand that. Then you shouldn't be trading the opening Wall Street when you know every single day is going to be volatile like this. Okay, so we got now 40 seconds to go. Let's watch the closing 30 seconds. Always. Remember what I say, always. Whether it's the first 5 minutes of Wall Street or the last 5 minutes of Wall Street or London market. Always pay attention to the last 30 seconds of your particular candle. I'm on 5 minutes, so I'm definitely watching the close of this 5-minute candle. Sellers look like they've taken control. They've absorbed all those buyers, and maybe they're going to push the market down. But let's see what type of reaction they get at this green box. Maybe it closes right inside, in between this red and green, and again, trade sideways in here. Okay, there's the close. Ignited red, came back down. Will it break our green box and drop, or are we going to hold in here? Okay, so far we're holding. Picked up a wick, we flipped. Okay, now it's testing red. That's what I mean. It has this tight little area of consolidation right here. I don't think Wall Street is going to stay in this box, but could definitely start to break out of here. It's holding. Will it get that momentum to break out of here? Maybe we got to watch for 5-minute volume to close above here, because if not, you're taking an impulse in the hopes that it will fill that Wall Street wick and continue to drive. So that's another thing. Maybe tell yourself, I know it sucks, where you got to wait for that candle to prove to you that it can close above the red box. Otherwise, if you're taking that, you're taking it on impulse. I'm telling you right now. And yes, it could fill up there. But what happens if it doesn't, and then it slams you down and it's trading down here? Okay, it came up and they came back down. It's still building. Watch how many times it builds. Then maybe there's intuition when to take an impulse. When you watch how many times it builds. Okay, I don't know if you guys have counted, but it's came down here 4 times now. Came back up and they rejected it. So the sellers are still in control. The market is very unpredictable, yes. Welcome to the wonderful world of trading. If it was predictable, everyone would be a trader. That's what I mean. It takes a lot of hard work. It takes discipline. It takes patience. There's so many opportunities that the market shows you an opportunity to take an impulse candle, and it's sometimes just tell yourself, I'm going to wait till the body closes. That's it. You've made up your mind. Okay, now it could turn into like a shooting star candle coming down. But you see now how the volume is just bouncing between the red box and the green box. See, we're at the neckline consolidating. What do you guys think now after seeing the first 5-10 minutes of the opening of Wall Street? What do you guys think now for US 30? Do you guys think bullish above the red box? Do you guys think bearish below the green box? candle body closing, not just like because now you're probably going to say bearish because of an impulse move, but I mean, where will this body close? Okay, so we're breaking. Sellers are in full control. Remember where the 5-minute structure recovered right here. And then that's our low of the day, that purple line down there. So you see how they faked out the buyers, see how they led it into Wall Street, that green leg coming up, and then they faked them out. All the buyers bid up there, and then they slam them back down. And then look at the volume. We're still inside this consolidated box. So to me, this is really, really shitty volume. I feel good that I haven't taken a trade right now, because there was too much margin of error. If I took a buy, I would be in drawdown, possibly stopped out. If I took a sell, when it came up, possibly stopped out. So I didn't, when I look back at this, I didn't win, I didn't lose. Life is good. I can continue to stay on the sidelines. Do you see how many opportunities there was for margin of error to take impulse trades and make multiple mistakes? But this candle now will close in 60 seconds. One more minute. Where will it close? Is it going to close right inside here? Is it closing majority red down here? Then we might push down. Next leg. Might be looking for a potential sell opportunity to continue with this leg coming down. Maybe the market will sell down. Okay, get ready. Here's the close, like 30 seconds. Now let's watch. Who will have momentum? Will the sellers bring it all the way back down to the near the low of the candle? Will they close it right here at the green box? Will the next candle open in the green box green and come back up? Okay, so I'm trying to walk through every scenario. Here's the push down. Closing in 15 seconds. And to me, it's just, again, indecision right in the middle of this consolidated area. I know in the next 10, 15, 20 minutes, volume will be better to trade. Do I need to force anything in here? Okay, so there was the close. Flash green, open, come back down, green, right in the green box. Again, we didn't close with red volume below. We didn't close with green volume above. So we're still in here. So now it's green coming back up. But it might just come back up and then they push it back down. Which they just did. Pushing it back down. Came down, filled up, continuing to fill up. So it's getting a little bit of depth of market at our green box. It's continuing to build. But to me, it's in this consolidated area where anything can happen. But I see that they faked out the buyers. Now it's shooting star candle. Now this is one that you might want to take an impulse trade pushing down. I'm going to go on this one. This is an impulse sell, and I'm placing my stop above the red box, and I'm looking with this impulse volume to come back down and test this 5-minute low structure. If it can potentially break, I'm looking to come down to the low of the day and determine what will happen there. So I'm in a current Dow sell, and I went in on an impulse trade, and that is my stop loss on an impulse. I do not want to get this going through green through here. That's my maximum risk on an impulse. Okay, and I want to show you guys, I went on an impulse. It could bite me in the ass, or it could continue to respect the supply above and continue push down. If it comes down there and closes red below there, and I'm still live in the trade, then I will potentially look to take a second trade with more confirmation. So I'm still kind of feeling out this volume where potentially going to get stopped out. My stop is right here, guys, right here. Very, 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 very close to getting stopped out. Just a hair above the red box. Okay, so every time it comes up there, very, very close to my stop, sellers are there absorbing them and pushing it down, but the buyers are still there filling up the candle. So eventually maybe they're going to break it through there, but I don't want to get that impulse green buy. So my final stop is right there. I'm giving it more than enough time to consolidate in here, but eventually looks like the buyers are strong. So you can see how strong they are. They keep coming up here. They're possibly going to take this out unless the sellers are still there holding, which they are. So this is the battle between sellers and buyers. I'm not the only one trying to sell the market right now. There's a lot of selling pressure up here. But what the close of the candle will dictate the continuation of the move. Okay, so far we've got a minute 45 left. It's coming up there, there's buyers. Coming back, there's sellers. It's a spin top candle, indecision, 50-50. Buyers are there, sellers are there. Where will it close? That will dictate. So see that big push again? Showing buyers are still there. So again, I got to man my stop loss up here. It might break right through this. So you see, I've given it 2-3 minutes to consolidate up here. I have a very, very, very tight stop loss too. But every time it comes down, the buyers are here. But every time it comes up here, the sellers are here. So where will the final close of the candle be? This is that game between that green team and the red team. Look at, oh man, every time it comes down to the point of interest where this candle opened, the buyers are still there. They're protecting this big time. So this is showing a lot of strength currently right now. Showing a lot of buyers are still there. Holy, this is a tough, tough market open. No direction currently. This candle bar could dictate the move for today because it's also going into 9:45. So it's a new 15-minute candle. So this is a very important close for the buyers or the sellers. This could dictate the momentum of the move. Here we go. So now it flashed red. Look at how thin it might close with barely any volume. Okay, so I'm still in this. I'm still live. It's a red candle that just flashed, but we're still in this green box. I did not get that red volume to close below the green box in order to take an additional sell. So I'm still in the first sell waiting to get confirmation. This could be another one of those where it drops red and it goes back up. Okay. So this body, I'm waiting for full closure. Again, I got to wait for 5 minutes, but this candle now represents the new 15-minute bar. Okay. So I'm still in this thing, but now it came down, higher low, higher low, higher low. The buyers brought it right back up. The seller's going to continue to push this thing down and get that closure below there. Or are the buyers going to flip this and come back up? But they could be fighting some resistance as they're coming back up. So my stop is still just right above that red box. Tough market. Holy shit. Okay, so the sellers now are in control. They took out these previous lows. What will happen down here? If they get it down here, this is where that support started. Okay, there's the break. Now, the low of the day is right there. Okay, you guys can manage your risk if you guys want, but if you're still holding the trade, I want to see full closure of the volume. So it took out that supporting area, took it out, still respecting the low of the day. Buyers stepped in, pushing it back up, but we still have red volume that could come down. We still have 3 minutes left on this candle. That's a long time. Okay, I want to get this red body to close below here so I can make this green box red, stretch it into the future, and maybe this will be ongoing supply, and my stop loss is above the previous high supply. So it's all going to depend on how this body closes. Some of you guys maybe dipped out of that candle and grabbed some pips. Like from there to there, it's about 40 pip drop. Okay, if you're still holding, I'm still holding on to the trade. I want to see if it can take out that low of the day. If it can take out the low of the day, then I'm taking my stop and going to break even. It's tough, guys. It's not easy. It's not easy. It's not easy to watch your profit go 40 pips and then it turns back up. It's not easy. But if we got to watch the overall direction of the market where it made a lower low, lower high, lower low, lower high, they kind of pinned it pushing down. I'm hoping that they can continue to take out that low of the day. It might take some time, but we need red volume to basically close below here to get more and more and more sellers involved in the market. Otherwise, buyers will just keep stepping in here at the low of the day and keep building this thing back up. So now we're about 90 seconds away from the close. Will this red volume close below here? Will the red volume close below this structure? Will the red volume come back near the low of the candle? All of these things are variables that will be answered at the close of the candle. Okay, so you see now sellers are pushing it right back down, right down to the low of the candle. Now we might have momentum to come down and take out the low of the day, that purple line. Where will it close? Will it close right at the low of the day, equal low? Will they push it down further? This could be a good TP right at this yellow line down here, at this daily point of interest. Let's see. Now we got selling pressure on our side. Okay, that's a 60 pip move. I'm going to go to break even now. I'm happy with that. 60 pips, take out the low of the day. I have no risk in the trade now. Okay, so now the only thing I got to do now is manage my profit. Okay, where will this body close? Look at 50% right there. How it's kind of at those bodies. That might be 50% at the close of this volume. I can already see, like right there. If I make a red box right there, any pullbacks maybe will get absorbed right there. Will I officially get to make this green box red? Okay, please guys manage the trade. This is the last trade of 2024. Okay, that's almost 80 pips right there. 80. If it drops down to that day, that's a 100 pip drop to that yellow line. I'm closing out 80% on this candle. Okay, sorry guys. I need to get some kids some Christmas presents. Right here. There, 80% closed. I got 20% running now. 100 pips. Perfect. Okay, so that played out really well. Unfortunately, I went in on that impulse, but do you see how I just placed my stop loss above that red box? And do you see how many times this candle retested it? And the structure held. The structure held, guys. So now the purple line, which was the previous low of the day at 840, this might act as resistance going forward. Let's figure out exactly now where's 50% of that big red candle. Grab your Fibonacci tool quickly. Go from the opening price to the closing. There is 0.5. And then where is your red zone? Go a notch above, a notch below, right there. That could be your ongoing resistance if it continues to come back up and retest this. So let me just get rid of this. So you see this? This green candle now, green, might trade into this red, and then that's where the sellers might continue to push it down. But do you guys see how I did something at this yellow line? I want to make this clear. We did this at the start of the call. This was a specific point of interest. If I go to the daily, I'll show you what this yellow line is. Here's the daily. Why did I choose this yellow line here? Right here. We were looking at the past, how volume reacted at these levels here. So this is a critical point of interest. That's why I was happy closing 80% of the trade down there. And I have a runner running. If the runner keeps going down today, fantastic. If the runner stops me out, it's okay. It's only 20%. The majority of that volume of that candle, I closed out down there. Okay. Okay, guys, that market open was tough. Holy shit. Okay, we dealt with all of that, guys. Yeah, thank you, guys. Smash the like button if you guys like what we do here, the way how we broke that down. Hit the likes if you guys grabbed a little bit of profit and you guys manage your risk appropriately. Look at that. We came up green. We're below the red box, so that's better for us. That's a lower high. It didn't come into our red box, and they're pushing it down and going further down. So runners can continue to run if you didn't scale out. Now we're moving 130 pips. Okay. And then if this closes below this yellow line, sellers might have just a little bit control for the time being, because this is that critical daily point of interest. But don't feel bad if you guys grab some profit down here, because this could easily turn back up green and come right back up. Okay, so I never feel bad taking money out of the markets. That was $1 billion I just made on that trade. 1 billion. And I got millions running on the runner. So I cashed out $1 billion, and now my runners, I got about 50 million running on the runners. I'm joking. It's enough to keep the wife happy. Okay, guys, so please manage the trade. I hope all of you guys are at a break even. Number one, okay? Regardless whether you're in profit or not, take your stop loss and go to break even. Learn that concept. Learn that psychology. Learn how that will help you with your mindset. I feel good anytime I take a trade and I have zero of my capital at risk. Then it allows you to really allow the trade to develop. When you're at break even now there's no risk, zero risk. I cannot lose any money, okay? The only thing that we had to do was protect some capital, some profits. Everybody is different, but normally I go out a lot faster because I'm just scalping down to here. But I was kind of playing that momentum to come down, take out that low, this area, and test that point of interest, which it did. As it was coming down, 80 plus pips, that's when I secured with that momentum 80%, leaving 20% running. Okay, and that's good enough. You guys see how we had to wait 2 hours to look for that trade, but that's part of trading. Patience, discipline, staying with the security, watching what's happening. Do you guys understand the fake out now? Now looking back at it, remember this leg that started just before 9 a.m.? Look at what they did. Look at the engineering of the move. This is when I like to backtest and review what they did. Understand that the market does this for a reason. They engineered the move up here. Why? To engineer to get the liquidity. There's money above here, right? When did they come out and tag it? Wall Street, 9:30. They came up there, they grabbed all the money, they grabbed all that pending orders, and then they got the money, and then they dropped the market down. And that's the money for you and I in our pockets. I made $1 billion, maybe some of you guys made millions, but that's right there, guys. Okay? So now when you look back, study this move. You might see this move every single Wall Street. Not always, but that's an engineered move. They induced that move, that famous word, inducement. Okay, my wife got induced when she was pregnant. I know what that means. I don't know what inducement means in the markets, but I know when my wife got induced, when I had no idea what the hell was going on when we had our first kid. Holy shit, Ron had no idea what was going on there. Dion was premature, couple months. All of these things, I had no idea what was going on. Okay, so it was a big learning experience. It's like a new trader coming into the markets and learning all of that. I said, Doc, you do your thing. I'm just going to sit back and you're in charge. You have the experience to do all these things. But they induced the volume, triggered it. Wall Street has the volume. And then they move opposite direction, guys. So this is a very common move in the markets. Learn this, study this, because this can help you become profitable over time. Okay, let's take a look at what gold did here over here. Gold continued to push down, guys. So remember what I was saying? They pushed the move, getting you to think that it's gonna continue move up bullish, but look how they drop the move down. Look to the left, guys. Like, it's pretty visual. You can see we're dropping. We came back up. It was a nice recovery, but it's still a lower high. We're below that point of interest on the daily, and then they continue to push it down. Okay, will it build? Will it build? And then will we come back up? Gold is just too choppy right now. I would avoid gold. In my opinion, I would stay away from this security. Maybe NASDAQ and US 30 could be moving a little bit better this afternoon. But we're moving into 10 a.m. Sorry. We're moving into 10 a.m. and there is a little bit of news right here. 10 a.m. news. You have, what do we got? Your consumer confidence in right here in 2 minutes, and your U.S. home sales. Okay. There's no earnings today, nothing significant. Let's just watch 10 a.m. Okay, and then you see now how the buyers, they dipped it down below that daily point of interest. 42,580 is our new low of the day, and the volume is closing above our yellow point of interest, and we're building, coming right back up to our red box, which was 50% of that big red candle stretched across into the future. All of these zones, if you like. If you want to get rid of these smaller red lines, you absolutely can. Okay, and continue to watch, if you're going to trade this afternoon, how things develop. Okay, and again, might be consolidating down in here now. It might create a bear flag down in here. Might trade here sideways for a little bit, and they continue dropping the market. Okay, is there any questions about today's session? Hope you guys enjoyed it. It's our last one of 2024. Dave and I are going to take a little bit of a break. I'm going somewhere warm in the Caribbean right after this call. I got to pack and get ready, and I will see you guys in the new year. And then we're going to start fresh, new programs. We're going to do a little bit more stock, security trading, options. We're going to do a little bit of crypto. And we're going to do some fun things, okay? I want you guys to continue to learn the financial markets, especially the stock markets, equities, options. You're shopping at Costco. You can actually buy and trade this company. There might be some securities you're already familiar with, Tesla, Apple, all of these securities. I'm trading a lot right now. I'm flipping MicroStrategy. That thing has the volatility I look for as a scalper, intraday trader. Oh my God, it's a scalper's paradise. If you're looking at MicroStrategy, MSTR, it follows kind of Bitcoin. So you know how volatile Bitcoin is. And they just got put into NAS 100 today, as of this morning with Palantir. So we'll see how it moves. Guys, look at this. Okay, came up green, back down. Came up green, back down. Came up green, back down. Are we above our red box? No. And look at now, we have a bearish shooting star candle continuing maybe to push down. If we get red volume closing below our yellow daily line, this could continue to sell off. So the buyers are getting trapped. They're getting trapped in there. Okay, guys, when in doubt, wait for a candle to close. You know, if you have to get more confirmation. My intuition was I took an impulse. I sold it, I believe, 940. This candle. This was the candle I sold on, thinking that it would break, but I was one candle behind. Okay, so I should have waited for 945. But placing a stop loss above structure held me in there. So you see, it was close to tagging me, but I placed my stop above structure. That's why when I'm trading, I'm watching how structure is being built in the market. I do not take my eyes off of structure. I do not take my eyes off of the prize. Hopefully you guys can continue to do that. Our runners are running right now. Maybe we're going to take out this low and then we'll get a 150 pip runner. There we go. Our next point of interest, this white line is our hourly right here. Nice whole number, 42,500. If it drops down there, there might be a market recovery. And if it comes all the way down there, that's a 200 pip plus trade. You got to be happy with that. And then just continue to trail your runner down. That's how you can eat off your runner. If you're going to continue to trade, maybe sell the pullbacks. Figure out where your next supply zone is, sell the pullbacks. If you see a market recovery bounce, buyers are buying maybe two bottoms, let the buyers prove to you that they can start to close above critical areas. If not, you might continue to be trapped and pushed down. Look at that red body candle. That is sexy. Continue to come down to us. US 30. Oh, she's beautiful. Miss Jones. Beautiful. She was a little bit, she had her Wall Street shenanigans over here, but she rewarded us. Okay? So just between us, US 30 is better than NASDAQ. Okay? I'm joking. I'm just joking. I don't want to get into those games, but NASDAQ and US 30 and S&P are all really, really fun indexes. And you can see how volatile they are. They come down and can come right back up. So what was the name of the webinar? Lisa, right over here. Lisa, it's all here for you. Come to our education right over here, Lisa. Come into our SST Super Systems of Trading. And right here, it's placed the second one. Right under the introduction, Super Systems Theory of Trading. Next most important webinar right here, Journey of a Trader, guys. Hopefully everyone can watch this over the holidays, figure out what stage or phase you are at in your trading and what necessary improvements you need to make to advance. But I guarantee you all traders at some time are going to go through these phases. Some will be successful at these phases and continue moving on. Some will be unsuccessful and struggle with these phases. But this is what I believe we all have to work on. This might take some of you guys 20 years, might take some of you guys 10 years. It might take you guys 5 years. Some of you guys are fast learners, might get this in a year or less. But you will have to go through one of these phases at some point in your trading journey. Okay, and then we start. What is a sniper? History of price action. What is trading? What is investing? What is money? And I'll continue uploading all of the webinars, guys. Okay, I just want to wish everyone a Merry, Merry, Merry Christmas. If you guys do celebrate, Happy New Year's. Everything, guys. If you're going to continue to trade these markets, just please be careful trading the next few days. Know when the market is open. Know when it closes early. I wish everybody nothing but success in the new year from the bottom of my heart, and Dave and everyone at SST. I hope you guys really understand how trading can really financially change your life for the better, but you got to know what you're doing, because otherwise you will struggle and you can lose a lot of money in this industry. It's not easy. So guys, just enjoy your holidays, relax, catch up on some sleep if you guys are tired. And 2025 is going to be very exciting, guys. I hope you guys are ready for it. It's a big year. You know how I always liked quarter increment moves? This is a 2025. The markets could dictate where we're moving. This could be the first year to go into 2050, next 50 years. If you remember 2000, coming to 2025, there was a significant move in the early 2000s, the dot-com era. Who knows what we're going to see with technology in the next little bit. But have a Merry Christmas, guys. Whether you celebrate or not, just enjoy the time off. Be safe. Everyone on Zoom, thank you, guys. Enjoy yourselves over the holidays. I love you guys. Be safe. Everyone on YouTube, thank you guys. Hit the like, subscribe. If you want to join the team, you're welcome to join us. StockSniperTrading.com. Join our free Telegram that's linked above for you guys. We'll have some promos, giveaways during the holidays for all of you guys here, okay? And remember this quote: even when financials are looking good, you still got to go hard like you're broke. Remember that, okay? Just keep going hard like you're broke when everything is looking good. That keeps you humble and keeps you hungry and keeps you going and not forgetting where you came from, okay? So thank you, guys. I will see you guys in the new year. God bless everyone. Enjoy the rest of your day. Thank you, guys.
Hey guys, good morning, welcome to the live session of Stocks Never Trading. My name is Dave, guys, my partner is Ron. Let's get down to business here, guys.
In on US 30, sell, okay? I'm jumping in. Guys, that's a 100 pip drop. Yes, we caught it. Hey, guys, 200 pips, please, secure.